What's up, investors? What's up, investors? Thank you for joining. I hope you can all hear me. This is the very first time me doing a stream, so let me know in the comments, please, if you can hear me, if my audio quality is good, if there's no delays, if there's no echo, and if there's nothing like this. What's up, investors? Obviously, this is the very first time streaming, so I have no idea how it's gonna be. I'll do my best to do high quality kind of stream and everything. And let me know how it goes. Write things in the chat. We'll talk about stuff. We'll talk about GameStop. We'll talk about Wall Street bets. We'll watch some memes. We have a couple of What's up now, Gras Magrebi? You are the legend. We'll talk about GameStop, we'll talk about Nokia, we'll talk about AMC, we'll talk about Reddit, we'll talk about Wall Street bets. I'll summarize basically everything that's going on right now with all these crazy stocks that are exploding, that have like 900%, 1000% growth in like what? In 1 week. This is just incredible, this is mind-blowing. So yes, let me know once again in the comments how's it, if you can hear me first of all. Second thing, if there's any echoes, and third thing, if the sound is not delayed from like my basically picture. So whenever I'm opening my mouse, that things might come out of my mouth. So if sound is good, basically, long story short, okay? So yeah, and also we will have today two guest speakers. Today we'll have two guest speakers. One guy is Tevis from Fundamentals of Investing. He is the guy who is responsible for growth investing. He is one of the best guys about growth investing I know. He is from the Instagram community, very smart person. We will have him around 2:30 p.m., like in 30 minutes. And then we will have Thomas from Get Rich with Richmond, also guy from Instagram investing community. He will talk about basically GameStop, all these kind of things, but he will talk about these things from the value investing standpoint, basically, okay? So today we will talk about all this crazy stuff that's been happening this week. At least like kind of summary. To the moon, diamond hands, hodl, hodl, hodl. Okay, so let me see, just testing right now everything while people are still joining and everything. Let me see how can I basically share my screen and stuff. Okay, I think I'm sharing my screen right now, hopefully. So yes, the stream is a little bit delayed for me, so I will see what's going on my screen maybe like in 10 seconds. So it's once again very first time I'm streaming. I don't have too much professional equipment. Let me put my light. I forget to put my light. Okay, so yes, I can see that now it's working. So now I can see it myself even in the background. Okay, looks like everything is working. Right now you see the dashboard for streaming on YouTube. You can see me, you can see light. Let's see if light is working and everything. Okay, I think like this is a little bit better. Yeah, definitely better with light like this. So yeah, looks good to me. Okay, so yes, I think people already joined. I think we can start talking about things right now. Okay, so yes, as you might have known, this weekend's Wall Street bets. Let's go to the Reddit and have some giggles and stuff. Oh, better like this. Wall Street bet. So this community on Reddit that you see right now, let me put my live stream and stuff here. So this community basically disrupted the whole financial system of the USA, maybe even of the whole world. I think all the mainstream medias, Wall Street journals, all this Bloomberg and stuff, everyone been writing about these things. So this is what happened. This week, in the beginning of this week, this community on Wall Street Reddit, Wall Street bets, I joined it already. I never even knew that I joined this already, but it's okay. It's already at 7 million people. Unbelievable. Like, I think at the beginning of this week, it was maybe twice less, maybe even way less than this. It's 7 million people right now following this basically page. And what happened basically? This week happened the following thing. So one guy, if I'm not mistaken, under the name Deep F Value. I will try to keep it PG rated so I don't get flagged or anything like this. So one guy, let's see if I can find his name. He was predicting maybe like half year ago, he was predicting that, I'll just find it here, Deep Value. So you can see what I mean. He was predicting basically that the stocks, companies such as especially as GameStop, are basically gonna explode. The thing that he was saying is that this company was one of the biggest company that was shorted, and short interest in this company was, I would say, I don't know, like 123%, I think, if I'm not mistaken, okay? And this guy saw it. He was buying GameStop shares back in, I don't know, like in the middle of this year, okay? And he was basically collecting the shares every time the price was dropping. He was buying just more and more and more shares. And eventually, as you can see, he bought these shares in the range of like, let's say, so what's the stock right now? Right now, obviously, markets are closed, so you will not see anything right now. But he was buying shares, I think, in the range of like $3-4, like right here, okay? So like in the middle of March, let's say. So and the price was $4. And now since then, the price went up 7,500%. So imagine, okay, so he bought shares, let's say to make it simple calculations, he bought shares at $4 each. And I think he spent like $50,000 or something. So $50,000 he spent buying shares at $4 each. He got approximately 12,500 shares. And obviously he was buying more and more later. And right now shares are like what, $325. Right now this guy sits at, okay, so I was wrong because I remember definitely that his net worth right now is more than $40 million. So I think he bought more than this shares. He definitely spent more than just $50,000. I did some incorrect calculations. 50,000 divided by 4 times 325. Okay, so whatever. So long story short, yes, the guy, I cannot just find his subreddit or whatever you call it. Like, I'm very no, it is the subreddit of this guy. Okay, now I see. So if any one of you know, what's up, Ashik, Rahmar Ashik. So I am trying to find the guy. I'm not professional WallStreetBets user. So if anyone of you can help me how to see, how to find a person in Reddit, just let me know basically. I think it's like this, user and then deep. Okay, and I think, I don't know, if you want I can make a little bit, it's okay. Okay, so yes, this is the guy. This is the guy of interest. Let's scroll all the way down when he started this thing. This is the guy, Deep freaking Value. I'm scrolling down when he started all these things. So it started even more than half year ago. So yeah, this is as far as I'm concerned. He's one of the first posts about GameStocks. I think it is GameStocks, yeah? Yes, it is GameStop. So you see here, GameStop, basically here. He was buying options. Call option, long story short, is when you're kind of reserving the right to buy shares. It's like kind of a down payment. So what this guy did, he bought call options for GameStop. And to make it extremely simple, this is what call options mean. So let's say you buy a call option with the strike price of $3 to make it relevant for GameStop, or I think here it says $8. Yeah, I never did options. I've never did options trading, so I might not be the best source of options trading information and everything, but it is what it is. So as far as I see here, he bought call options with $8 strike price, which basically means that as soon if GameStop price if actual GameStop price is more than $8, he can exercise the right of this call option and basically convert this option into actual shares. So for example, right, whenever the price is, let's say, so $300, without whatever price it is right now, $300. So, and his call option with a strike price of $8, this is what it means basically, okay? So right now the price is $300. He exercises his right, and even though the current price is $300, $325, he can still buy shares, hundreds of them, at $8 each. And then if he wants, he can resell them immediately, but he didn't do it. He's still holding and basically extract all the profits. So this is when it all started. And if I'm not mistaken, this is basically the value of his account at the very beginning of this whole thing, which is basically around $100,000 if I'm not mistaken, okay? Where is this? And now, okay, now it's good. So, and then later, where is this? No, it's not back again. Okay, and now we scroll all the way to the top. So he started this whole thing 1 year ago. 1 year ago, as you can see, Sunday, September 8, 2019 is where he started basically his whole thing, at least on Reddit. Maybe he started doing all this investigations, research before this, but this is when he started basically showing his journey on Reddit. And since then, the lowest price that he got, the lowest value of his portfolio that he was getting was, I think, approximately, I think I saw a price of like $30,000 or something. Okay, I think it's like here. Okay, see? No, it's not this one. It's another one.
Sorry, I couldn't quite hear you.
Okay.
Could you please repeat what you said?
Siri is speaking with me for no reason. Okay, so let's see, where is this? No, it's already when he started exploding. But okay, whatever, like let's use this one. I cannot find the lowest point in time, but you remember he started with $130,000 value. This time it's just 42,000. So he basically lost 2/3 of his whole portfolio. His return basically is like what, minus 60%. Like a lot of normal people, like amateur investors and everything, they'll be like basically scared, like, okay, I'm losing so much money. They'll just sell everything and lock in losses and say whatever they got left. This guy kept holding. So as you can see here, he is holding here $42,000 of portfolio value, and all the way until now. Let's see his very latest post. Right now, the value of his portfolio, like I was saying, yes, it is $46 million. Imagine being this guy. It is so. Now I see the importance of having double screen, by the way, because now I cannot unfortunately read your comments and everything. So your money friend, what's up, Joe? Thank you for joining. First time you're seeing the famous Reddit forum. It is like this. I'm using dark mode. Some people use light mode. Doesn't matter. Basically, just either the background is black or white. That's all there is to it. But it is just like a forum. Okay, so Reddit is literally just like a forum. I'll open a new tab so we can come back to this guy. And Reddit is literally nothing else than forum. So Reddit prohibits advertising. It allows advertising from third-party companies, like here on the right and everything, okay? But you cannot self-advertise. What I mean is that you cannot self-advertise. What basically means you cannot go in the comment section and say like, okay, guys, subscribe to my YouTube channel. Your post will be deleted. You'll get like negative karma or stuff like this, and you can see cat pictures in the meantime while I'm talking. So, and basically, long story short, if you start self-advertising, like subscribe to my channel, join my Patreon, like this and this and that, moderators will be banning you, you'll be decreasing your karma, and eventually you'll be banned from Reddit. So this thing is an actual forum where people just actually talk. And that's it. And by the way, for some reason, this says top live stream, just the guy playing with his cat. Okay, that's what I would do if I had a cat. So yes, long story short, for this reason, people just talk here. And one of the things about Reddit is that you can create subreddits, okay? I'm not using Reddit as too much myself personally, so I have like just couple of, I'm not even 100% familiar with the interface and everything. I'm just basically using 2 subreddits, which is Davey504 with this Italian bass player guy. Whoever want to see him, basically give him a watch on YouTube. Pretty fine guy. Pasta la vista and everything. So, and then you can join different subreddits, and these different subreddits is basically forum inside forum. So WallStreetBets is basically forum for kinda investors and traders, whatever they call themselves. But in fact, these are just, retail investors. They call themselves, it's not me. They call themselves, as you can see here, I'll scroll it, I'll make it bigger and stuff. Oh man, I'm so bad with the computer. How do I scroll right? Okay, I cannot scroll right. Whatever. So they call themselves, you see here, they call themselves degenerates. But long story short, these are basically people who are interested in investing and trading. And here they basically, I don't know, like before this, they were just pushing some random companies like, what's up guys, I just YOLO'd all my money on Google, I just YOLO'd all my money on Apple, and whatever it is. And eventually sometimes they have some kind of interesting topics to discuss, I don't know. And recently, this is where it all started basically. This whole GameStop stuff started here. This is the epicenter. This is the starting point of the whole thing that happened on the stock market last week. It all started here. It's impossible for me to scroll all the way until bottom to see where exactly it all started, because there are posts made every single minute, every single hour and stuff. So, but just keep up with me. And this is one of the subreddits. This is the investing community, trading community, where people just 1 week ago, this subreddit was a curse. No one was going to this subreddit. It was just a prohibited place. If you're an investor who respects himself, you just don't go here. This was the forbidden place. This was the place you don't want to be. This was the place you don't want your kids be here. This was the cave, epicenter of all the bad evil, all the bad things about investing and trading. So they had pretty bad reputation, let's say so, okay? But now, because of this thing, because of their whole thing with the GameStop and AMC, Nokia, Best Buy, BlackBerry, Bed Bath and Beyond and everything, and BlackBerry, because of this, just literally in a couple of days, they turned their reputation from one of the most hated subreddits, one of the most ridiculous subreddits, into one of the most enjoyable, into one of the most admirable subreddits. And the thing they did is that they're basically punishing all these big hedge funds, corporations, and all these kind of bad guys, let's say so, okay? Okay. So before we continue, let me see in the chat. Once again, this is why I need to have double screen, because I cannot unfortunately read the chat and go through Reddit at the same time. So I will need to come back and read the chat. And it is my very first time live streaming, so I apologize in advance if it doesn't look good or professional. Okay, so now Ras Maghrebi is saying, did you invest in the GameStop stock? No, I do not invest in GameStop stock myself personally, because I am still trying my best to follow the principles of value investing. So I do not invest in this basically, okay? It is tempting. I understand how tempting it can be. Getting 900% returns in 1 week, it can get extremely tempting, but no, I still kind of resist investing in this, because it is actual lottery. What's up, Sebastian? Thank you for joining To The Moon Diamond Hands. So, yes, it is very hard to resist. I understand the temptation, but no, I do not invest in GameStop stock. I know that I could have made, I don't know, millions and everything like this, possibly, let's say so, but no. I still try to keep up with my value investing mindset, psychology, and all these kind of things. And yes, next question was your money friend Joe. Incredible how some random guys posting memes could move the market. Indeed. And that's why it is so fundamental what happened. It is so monumental. It is actual monumental event in the stock market history. Nothing like this before. Nothing like this happened before. Maybe in the past, big corporations, hedge funds were able to move the markets and all this kind of thing. I think in the meantime, because I'm just talking, let me put myself on the big screen and stuff. Okay, so I think that in the beginning, anyone who was moving the markets, these were big corporations, hedge funds, governments, and still very big, huge world political economic events like World War II or, for example, this virus stuff and everything, okay? So, but now, and these things were moving the market, yes, indeed, but now, because of development of internet, because of development of these online brokers, especially because there is commission-free trading, literally you do not need to pay any commissions, any fees, you just buy stocks. And unless you're buying the stock not in your native currency, if you're, for example, not using US dollars to buy stocks which are valued in US dollars, you don't even need to pay exchange rate fees or anything like this, okay? So right now, and once again, because of the internet, it is so influential how some events, which can be insignificant in the beginning, how significant they can turn out to be in the future, basically, okay? And this is what happened. And this was so many different factors that made this whole thing possible, okay? So first of all obviously people were, let's say, so sick of rich corporations, hedge funds, basically playing the game with the rules that they made. So it was literally investing, stock exchanges, stock markets, financial markets in the USA, and I would say in every single country in the world. The rules of the games are obviously set by those who are the best players in this game. So those people, hedge funds, pension funds, investment corporations, governments, they are setting these rules. They prohibit retail investors from trading, from buying stocks. If you heard about RobinHood prohibited people from buying GameStop and AMC and I think Nokia, so you could not buy these stocks, you could only sell this. And there were even some cases where RobinHood was selling stocks of GameStop without people even knowing this. So literally you have Robinhood account. You go inside your portfolio the next day and you see that your portfolio value decreased. So you go to the recent activity and you see that your GameStop shares were sold without even you selling them. So Robinhood was selling these shares by themselves basically. It was like, obviously it's not good thing to do, to say the least. So, and people got bored, people got annoyed, people got mad about those things, long story short, okay? They did not want to play game which had unfair rules. And you know the ideas, like a lot of people, they don't like big corporations, hedge funds, because they're stealing money, they're playing by the rules that they set themselves. So people were like having this inside anger towards these companies. And so this was the first reason for this whole thing to happen. Second reason was, like I said, this guy who saw that GameStop was having an extremely big short interest, which means that there was so many shares being shorted comparing to those shares that were being bought. So long story short, I think that the short interest in GameStop at some point was 123 or 125%, which means that more shares were being shorted than there was actual shares on the market, which is unbelievable condition, which is like, it's not supposed to happen like this, but it did. And so one guy saw this and he started buying call options. He was not buying shares themselves, which was a good idea, basically, not to buy shares themselves. He was buying call options, which means that just in case if his strategy fails, he will just lose the premium that he paid for these call options. But if he will be buying actual shares, that's it, he is in the game. If his shares lose value like 50% to 80%, that's it, he loses 50-80% of portfolio value. But he did smart thing, he just bought call options. Just in case if this doesn't work out, he just loses his premium. Good strategy. And so next thing is that this guy started building his position in GameStop and he started waiting basically for good news. And good news started coming. Microsoft partnered with GameStop, I think. Let me start again sharing the screen right now and I will show what I'm talking about. Okay, GameStop. And we got the news. So this news was obviously a long time ago, but if I'm not mistaken, Microsoft and GameStop, they were partnering. Basically, they were doing a partnership. I don't remember, unfortunately. Like, I was not following GameStop news. Like, I was not investing in that company. I'm still not investing in this company, so I don't want to lie. But I think, generally speaking, GameStop and Microsoft was doing a partnership. And this was one of the first signs that potentially this stock, which is, let me just type Microsoft, GameStop, partnership. Okay, so here it is, October 8th. It's GameStop, basically official website, okay? GameStop announces multi-year strategic partnership with Microsoft. So yes, I was not lying. If you want to read it, basically just Google GameStop Microsoft partnership and it will be the first link. And so long story short, what it says is that yes, if such big company as Microsoft believes in GameStop So there is a chance for this company to financially recover and start being profitable company again. Because GameStop, if we go into financials, and I would like to go into financials of GameStop a little bit later, it is a company that's basically surviving its last months. It was surviving. It was barely surviving. And then Microsoft starts basically saving them. This was one of the first signs that basically GameStop is kinda on the path to recovery. Another sign was the Michael Burry. Michael Burry is the guy who predicted financial crisis of 2007, 2008, by the way. So 2008 crisis happened because of the mortgages. If some of you don't know, so long story short, I guess you're aware of 2008 financial crisis. So what happened is that there was so many mortgages were given to basically every single person. Like there was so little documents needed for you to be provided in order to receive mortgage. Right now you need to proof of income, proof of, residency, like tax documents, tax returns. I didn't get any mortgages yet, so I'm not sure what documents you need, but you know that right now, if some of you are already buying houses, it is very difficult process to receive a mortgage. You need to get approved and everything like this. But in the past, 2007, 2008, and before this especially, mortgages were given basically, you can just promise that you're gonna pay mortgage and that's it, you get mortgage. Like just go to the bank, you you look like homeless and stuff, and you just say, can I get $500,000 mortgage? And like, you gonna pay us? Are you sure you're gonna pay us? You say, I promise I'm gonna pay. And they're like, okay, we'll give you $500,000. And then that's it. And because of this, because the idea, banks almost never lose money. This is why they're giving so many mortgages. Banks then were assembling so let's say, so they're all like, I don't remember how it's called professionally, but they were collateralizing mortgage debts. So it's collateralized mortgage security, CMS, if I'm not mistaken, it's called, okay? So they were taking 100 mortgages, let's say so, putting them in one, let's say so, ball of mortgages, into one bag of mortgages, and then they were going to the rating agencies first of all, and they were presenting this as a highly safe investments. So basically, rating agencies, they assign ratings to investments like AAA, BBB, C, D, and all this kind of stuff. If there is more A's, like AAA is the highest rating. It means that investment is more or less safe, but at the same time, if investment is safe, the returns are kind of low, okay? So which means that these banks, they were collateralizing mortgages, bringing them to the rating agencies such as Moody's, S&P 500, and they were asking these rating agencies to give these high ratings, basically, okay? I don't know if there was bribes involved or there was no bribes involved, whatever, but this is what it is. And then they were selling these collateralized mortgage securities, obligations, CMOs, I think it's called. And they were selling this as an investment, let's say so. And they were selling these investments to other people, to retail investment, institutional investors, and people were investing in these mortgages. Basically, they were covering the debt that these mortgages were producing, long story short. I guess it's as simple as I can understand. And obviously, because these mortgages were given practically to every single person, like, can I get mortgage? Okay, here you go. So people started defaulting on mortgages, and default means that, let's say, you cannot pay mortgage anymore. Okay, so that's it, like, you just cannot pay mortgage and you get your house taken away and stuff like this. This is what default means. You probably have heard this term. It's like financial professional word of saying you cannot pay anymore. And they started defaulting. Obviously, this was a chain reaction that led to financial crisis. People could not pay mortgages. The securities were failing. No one was buying them anymore. And there was still so many pending mortgages, collateralized mortgage obligations, like still pending to be rated, still pending to be sold. Banks were stuck with this collateralized mortgage obligations. They couldn't sell it to anyone. Rating agencies couldn't rate them anymore. So big chaos, chain reaction, and that's it. Whole financial system of the USA collapsed, affecting basically the whole world. And this guy, Michael Burry, he was the guy who, let's see if I can find a picture to put him, I don't know, whatever. So he was the guy who saw this coming, and who like said, like, what are you doing? Like, you're not doing correct thing. Like, you are just gonna collapse. You're gonna ruin the whole financial system of the USA, of the world. Like, you cannot do like this. So he predicted this. He was betting against this. He was shorting these securities, and all his colleagues, all his employees. He was also, by the way, there was a movie about the guy. I think it's called Big Short. Okay, yeah, Big Short. So if any one of you wanna see the movie, it's called Big Short. Just let me see really quick. Yes, hello, what's up, what's up, Tevis? Yes, give me a couple of minutes more, and then we start. Okay, so a couple of more words about the financial crisis, and then we're gonna talk with Tevis about what he thinks about the whole GameStop situation. So this guy, Michael Burry, he predicted that the whole financial system... Привет, Dasha. He predicted that the whole financial system is gonna collapse, and he started shorting the CMOs, collateralized mortgage obligations, okay? He started shorting them, and all of his employees, all of his co-workers, his bosses, he was like saying, you're crazy. These are AAA rated securities. Like, they're not gonna fail. Like, and he was, I guess, almost fired. I do not know his exact biography and everything. Maybe he was fired, whatever. So he was like basically alone. Everyone around him was saying that he's crazy, he's doing meaningless things, that he is wrong. How can you short AAA rated securities? Securities with the highest ratings, basically. Securities that cannot fail at all, basically. But he said that they will fail. And this is what happened. He basically predicted the future. And so, second thing, what made the GameStop shares to explode after what I said, what was the first thing? I already forgot. So Reddit, then Microsoft, yes. After Reddit guy, Deep Freaking Value, started assembling his portfolio of GameStop shares, of GameStop stocks. The first good news about that the GameStop might be able to recover soon was its strategical partnership with Microsoft, which I showed you article a couple of minutes ago, like 5 minutes ago. And this was one of the second things that Michael Bird, the guy who predicted the financial crisis, he said that GameStop is not actually as bad as people think. And this is when it all started. Corporations, hedge funds, they're all short selling GameStop stocks, basically, and this is why the short interest was 123, 125%, something like this. But once again, it means that there were more shares being shorted, that there are more shares in the market, which is like that unbelievable, basically, conditions. So, and then eventually it all started. Reddit people started saying, okay, we need to buy GameStop shares. We need to show these hedge funds that we can play their game by our rules. And people started buying shares. This is one of the first guys, like I said, who bought the first share. The portfolio value that he has right now is like basically 46 million. He gets almost $13 million in one day. Pretty good salary to me, $13 million in one day. This is the guy who saw the future. This is the guy that we all want to be one day. But let's see. Hopefully any of us can be. Okay, I guess we will stop, but we are not finished with the GameStop yet. I just mentioned what was the beginning of this whole thing, what made the whole GameStop thing happen, let's say so. What was the first reasons, what the first things that started the chain reaction of all these things. Because right now we have Tevis. We have Tevis here getting ready to hop on a Zoom call. Tevis is the guy from Fundamentals of Investing. He has Instagram page, which is basically the same, Fundamentals of Investing. Or he also has YouTube, which is, let me say, okay, start chat. He says ready. So he has also YouTube, says Fundamental of Investing podcast. I will put it right here, right now. So you can subscribe to him if you want and you need to subscribe. What do I mean? Like, once again, Fundamental of Investing. And yes, I've seen a couple of your videos, Tevis, like I promised you. You see these red lines. So I was not joking. I actually was watching your videos. I've seen like half of them. Perfect, very perfect podcast with Thomas, I enjoyed it the most. So this is the guy, Fundamentals of Investing podcast, extremely smart guy, growth investing. Go subscribe to him. You will not regret. And now let's invite Davis for our call. I hope you can still see it. Where is this? Tax. I'm very bad with computers, as you can see. I don't know how to how to start Zoom call. Okay, I think it's new meeting. Okay, it says cannot start video. Why not? Oh no. This is no bueno. Okay, how do I do it? Okay. I think it's like this. So I put here. Very bad I am with the... No, still cannot start video. This is no good. So, anyone who did live streams, can you help me with this? How can I do Zoom call with... Because it says that I cannot use my camera, because I'm using the camera right now with my streaming software. Okay, let's try maybe Google stuff. Just give me a second. Some technical difficulties. Tavis, let's try Google, whatever it's called, Meet, whatever it's called. Tavis, let me know in the chat what's the name of this Google software where you can speak. Okay, Tavis is here. What's up, Tavis? And I cannot hear you, unfortunately, looks like. Give me a second. So yes, streaming on YouTube is hard. Speaker.
It's a couple of moments delayed. Is it working?
I can hear you now, but unfortunately I cannot start my video. So okay. I guess we just have to look at you the whole time. I'll just put you in the background of your YouTube page so people can join you at all times, subscribe and everything.
Yeah, I can send a link to the bio. Let me see if I can find it.
Okay, so then I will use it like this. I will use basic. I will experiment it like this.
So I just threw the link in your live stream chat.
Okay, thank you. Okay. So I guess we kinda can see right now, yeah. Okay, something like this and like this. So okay, so yeah, what's up, Davis? How are you doing today?
Doing pretty good, man. I was actually editing a video for this whole situation that I want to release on Tuesday. Mm-hmm. So it's pretty fresh in my mind. I've been tuned in all week into this GameStop situation. I find it very interesting, actually.
It is definitely monumental thing that's happening right now. It's never ever been anything like this, I think, before, and I'm not sure if it ever happens like this in the future. So let's see how it goes. And the reason I invited you here today, because you are extremely good representative of growth investing. I actually enjoy, I read your book when I was in Colombia, so I downloaded the book because there was no internet, so I was reading, I read it all. You have very good also writing skills. Your book starts with your experience when you were doing in the college, I think, when you were doing trading simulation and stuff, and you did penny stock and basically destroyed everyone. This was very good way to start the book. So I'm definitely recommending everyone to check. I'm definitely recommending to check his book. I think it's in your Instagram bio, if I'm not mistaken. Yes,
and it's in Instagram. Yeah,
and I think it's free. Yes or no? I don't remember.
No, I think it's something like 10.99 or $11, something
Still,
like that.
definitely, it's worth reading. Worth reading. I read it, very good, and it's very easy to read. It's like 100 pages something. It starts very good. It engages you immediately, and then you just read, and it's very, very, very good book. I extremely enjoy. I didn't even expect that I will enjoy it read that much. Have very good writing skills. Trust me, I was just amazed. So
Thanks,
good job.
man.
And
Appreciate that.
that's why I wanted to have you here, because you are very smart growth investor. I am being, as you know, value investor, but I do accept growth investing in my portfolio. So my Corsair position, my renewable energy position, and if you can count as ARK ETF as growth investing, so then it's like 2.5, 3 positions are growth investing.
We're both in Corsair and we're both in ARK, so that's
Yes.
2 positions we have in common at least.
And obviously they're struggling right now, but before this the performance was very good.
I mean, I don't know if they're struggling, right? Like they're struggling in comparison to this crazy market where everybody's expectations are that stocks go up 20% a day, but I don't think, Coursera. So it's interesting because in this whole WallStreetBets situation, the main companies that were talked about were GameStop and then secondarily AMC. And then there were also other companies like BlackBerry, Nokia, other companies with high short interest. And near the bottom of the list was Corsair as one of the companies that was talked about on WallStreetBets. And after Robinhood sort of started blocking and placing limitations on this, we actually saw Corsair go up like 28% or something on Thursday.
But at the end of the day, it was only like 6 or something.
Yeah, it gave it all back pretty much. But it was interesting to see, man, like how they're just pumping it. But I mean, Corsair is exactly. But I'm still in Corsair. I don't have any expectations for it right now. I think my main sort of catalysts are after their first earnings in February. I think by summertime we'll see, them be much higher.
I'm also in Corsair long term. Like it was very perfect company for me to invest, because I don't remember if I told it to you or to Thomas or maybe someone else. So the idea for me investing, and I think it was second growth investing in my portfolio. First one was renewable energy. The ticker symbol is REGI, REGI. Very good company, performing very good recently. So long story short, Corsair. Why Corsair? Since the beginning, since school, whenever I was building my PCs, trying to build it, the only RAM that I was going to buy was Corsair. I didn't even consider any other RAMs. I only knew that, okay, I will select my video card, graphics card, I can select my processor, but RAM is already selected. It's going to be Corsair 8 gigabytes or like 16 gigabytes. Because I know everyone was buying Corsair. I see all of my friends were buying Corsair. I was buying Corsair. If you just go right now on Google and type like best RAM 2021, half of these lists will be Corsair, Corsair, Corsair. This was already first sign for me. Then I went to see the financial statements, all these balance sheet, income statements, cash flows, and the financials were pretty good. And then they were only listed like IPO was like in August, if I'm not mistaken, or something. Yes. So it's pretty new company. So kind of maybe we are in the very beginning of potentially big growth in the nearest future. Obviously right now, since we just did an IPO recently, the volatility is high, 28% in one day, -6 in another day. It was expectable. But I am here in the long term, and let's see how it's going to be the first report in February.
Also, don't forget that Corsair has already doubled since their IPO. They opened at 17, and now they're in mid 30s. But for me, it was very similar to you. I think I found out about their reputation in the sector after I started seeing the macro trends in build a PC, the macro trends in gaming in general, because of the new console refreshes. Everybody, like the Google Trends, were seeing new highs. And it's interesting to see because I think that this sort of hypothesis was a little bit validated by Logitech when they reported earnings. They had like EPS beats that were double their expectations. And so if Corsair is any indication, like it is the same as Logitech, then we're hopefully going to have a very good quarter.
I extremely hope so. And I believe it will happen because right now it was, I don't know, Christmas. So people were buying presents basically to their kids, to themselves. And like building PC, I know it's not that expensive, I guess, or just updating it. So maybe because of this, basically Christmas shopping and stuff, maybe we'll see some boost in revenue and everything, which I'm obviously expecting to happen. And because it's 2021 now, so all the new releases, new RAM, new this, new that, so most likely good things will happen. So one interesting thing about the whole situation with the GameStop, AMC and everything, I actually was almost about to buy AMC like 3-4 months ago. So you know that my investing, majority of my portfolio is value investments. Then I have 2 companies, if I'm not mistaken, which is Southwest and Carnival. It's the companies that are recovering. I like investing in companies that are recovering. So like they're very cheap right now. As soon as everything is good, hopefully sooner or later it will be hopefully good. And I don't believe that there will be no cruise line companies left at all in the world. I don't believe, like at least some of them will be left. So I selected the companies which have the biggest chances of survival and invested in them, which is once again Carnival and Southwest. And I'm keeping them, waiting all the way until the cruises are back. Hopefully I can get some triple-digit returns, but let's see how it goes. And then as soon as everything is back to normal, yes, I might sell them. And one of these companies, I was thinking, okay, so which industries were affected? Cruise lines, airlines, restaurants, hotels, cinemas. These are just first 5 things that come to my mind. Airlines are like at 50% capacity already flying, basically. Yes, cruise lines still completely almost like no cruises happening. Hotels, people are staying. Restaurants, people go to the restaurants. But cinemas, I think they're just like the cruise line companies. I think they're still closed, or at least I don't remember any single one of my friends going to the cinema in the last year. So this is kind of similar situation as with the cruise line companies. They're almost not doing any revenue at all, except maybe charging for streaming and everything like this that they provide now. And so I was analyzing AMC and all the other, I don't remember, was the biggest competitors. And AMC, from my strategy, which is to select the company which has the biggest chance of survival, it was AMC. And I was I was about to add it as a whole position, which is like I was about to invest like $700-800 in this company. And at that time it was like, let's even to make it interesting and stuff. I think I'm still sharing my screen for the YouTube. So I think it was like 6 months ago or something, like August maybe, I don't know, October, November, I think, if I'm not mistaken. And I'm always buying the first week of November. So at that time they were like $250 per share. So let's say calculator.
You would have tripled your money, or no more. It went.
So.
Oh yeah, AMC went really high actually.
So $800 I was about to spend on AMC, which is $249. I was about to buy 321 shares of AMC, which is right now they are valued at like $13.26. So yeah, I could have made like right now $4,300 just from $800 investment. But as you can guess, I didn't do it, which I now regret.
Well, okay, so here's the thing though, right? And I think this is a big difference for this growth versus value discussion is the logic makes sense to buy AMC because people aren't going to the theaters, and the logic makes sense to buy Carnival or Southwest or something like that. I think, in my mind at least, it seems like, well, okay, these are beat up because it's an emotional response for them to be beat up. But what happens 5 years from now? What happens 10 years from now? And the numbers that I'm mainly looking at are streaming subscriber counts, are Roku adoption rates, are all of these, like Disney Plus is a huge company Disney is a huge company that I'm bullish on just because of their streaming. And so for AMC, the reason I never really looked into AMC or GameStop or any of these companies is because if I bought them, I would buy them with the intention to sell them again after 1 year or at the very max, 2 years.
Yes, that's the same for me. I buy recovering companies to sell them as soon as everything is back to normal. I do not plan to invest in these companies and hold them. I can sell them once everything is back to normal. I will most likely sell them, and then maybe when there is like a couple of successful quarters in a row, and if I see that it is a good company, I might reinvest it back in it, and then I'll maybe pay higher price than a couple of months ago, or maybe the price will drop again, because as soon as everything is back to normal, there will be most likely hype. People will be like, okay, cruise lines are back, like cruise ships are back, let's invest everyone in Carnival. So maybe what I'm expecting, I might be 50% right, 50% wrong, but I think that there will be huge hype when cruises are back to normal. People will buy, and then a couple of months after this, the hype will basically slow down, and the price will be like back to kind of normal and everything.
Well, yeah, I mean, you saw, it's interesting because you saw all of the major cruise lines and all the major airlines go up 20 to 50% on just the day that the vaccines were announced, and so of course that's going to be, a big, it's actually interesting because I was listening to the stream before I joined, that you were talking about the deep FM value guy, because he has a YouTube channel, and in that YouTube channel he talked about GameStop like 2 years ago, and he did a full 1 hour stream on it. And it's interesting because he identifies himself as a value investor. And the reason why he bought GameStop was because, the company had a market cap of 200 million, but they had a cash position of like 550 million, which made absolutely no sense. And so a lot of his valuation metrics for GameStop at $4 was value based. And so he didn't, of course, you don't expect it to squeeze the $400, but he expected it to go to do a short squeeze because of that short interest to something like $10 or $15 or something like that. And he was just adding to his position every time it dropped under $4. And he was doing that for 2 years, and people didn't really pay attention. And, it's interesting to see the YouTube videos now. I mean, they have like hundreds of thousands of views now because everybody is looking in retrospect. But I found it very, very interesting how this whole momentum of these retail investors doing pump and dumps was all started by somebody who identifies as a value investor.
You never know what's gonna happen. Like if things will be too obvious, like I think there will be no such shock, no such event. Well, this whole thing is such a monumental, let's say so, event. It is because like it was unexpected, like you didn't, and it was so slow, so fast. It happened so fast, like literally in less than a week it all happened.
Well, I think the more important part, because that something like this had to happen, it had to happen because ever since the internet came along in the 90s, and we had commission-free trading more recently, retail investors as a cohort have begun more and more informed. The playing field has been leveled to a certain degree where retail investors have the same amount of information available online that these big funds do. And so, but the problem is that the perception of retail investors is still this like dumb money perception where they don't really know what they're doing, and that people should still invest with hedge funds. And so eventually that buildup had to come to a point where it had to be this, tug of war, and GameStop just happened to be that company. But I think it's important to happen because hedge funds do a lot of stupid trading, like having 140% short interest on a company. It's even if it does go bankrupt, it's still a huge risk. You can't. It's just reckless, and I think that the main thing that this should be taken away from this is not the fact that this happened or the fact that, GameStop did 100x in 2 weeks, but more so the fact that there needs to be a higher call for regulations. And I think that's the bandwagon that a lot of politicians are now jumping on.
Something will change, I have a feeling. I don't know, hopefully in the favor of us, retail investor, which will most likely not happen in our favor. But I think some actions will be taken. And let's see. I don't know how is this gonna be with the RobinHood being sued. I don't think anything will happen, but let's see. What do you think?
So
you know that the people sued the RobinHood, right? You've seen it.
Yeah, no, I'm totally tuned into all the news that's been going on, and so a couple of things, right? Webull and Robinhood both placed restrictions. TD Ameritrade did the same. I believe
Charles Schwab, I think.
Charles Schwab maybe as well did the same. But the reasons why they did it is more interesting to me, because when Webull, their CEO, went on different podcasts, he went on Bloomberg, he went on CNBC. I saw the interviews myself, and he said, well, the reason why we did it was because our clearinghouses placed that restriction on us because of such volatility in the GameStop being traded around. We didn't have enough, like we had to still clear that cash. Like if you win, let's say if Deep Fucking Value wins 40 million and he wants to cash that out, like the broker doesn't have that like on hand. And so that process goes to the clearinghouse, and the clearinghouse takes, I think, 48 hours to clear all that cash. And so until that happens, the broker doesn't want to take on more risk, or they don't want to take on more trading because they're exposing themselves to a liquidity issue, to not be able to pay out all of these investors going into it. And the Webull CEO was completely transparent about that. He said, hey, we did not want to stop trading. We actually protested against stopping trading. It was a clearinghouse issue. And it was like a regulation issue that's had been around for hundreds of years. And it wasn't a Webull, like it wasn't the broker's issue. It was the clearinghouse that's supporting the broker's financial transactions. So many people assumed that this was the case with Robinhood, but then you have Vlad go on, he went on CNBC, he went on Bloomberg, and finally he went on CNN with Chris Cuomo. And Vlad was just the stupidest interview I've ever seen in my life, because he basically said, no, Robinhood did not have a liquidity issue. And we were doing this out of an abundance of caution for our clients. Well, that's really dumb, right? Because if they did have a liquidity issue, then it's not Robinhood's fault. It's their clearinghouse, which is, I think, Apex does Robinhood. And so it's not like people would have forgiven Robinhood for that because it's a regulation thing on the back end. But the fact that it wasn't a liquidity issue means that it was a conscious decision from the Robinhood team. And the fact that he said, we're protecting our clients. Well, how, logically speaking, are you protecting your clients if I hold GameStop and nobody's allowed to buy it, only people are allowed to sell it? Obviously, it's going to go down and I'm going to get burned because of it. Like, I don't understand how that logic plays a part. And so this is the piece that a lot of people are criticizing him for. And the class actions against Robinhood that have been filed have basically been around this decision-making process, because for Webull, it was out of their hands. It was not their decision. But for Robinhood, they basically debunked. They said, hey, it was our decision, and we made the decision to close it off. And, the more interesting part, once you go deeper and deeper and deeper into this, is when you bring, Citadel into this whole game. I'm not sure if you were talking about it before in the show or not, but basically Robinhood has a lot of different investors that are their seed investors, and Citadel is one of them. And Citadel is the same. They're essentially market makers. They're huge funds. Citadel was the same fund that gave 2.75 billion to Melvin Capital to bail them out because Melvin Capital got short squeezed and they couldn't raise the funds needed to close off their GameStop position. They had to sell their longs. And so Citadel gave them a whole bunch of money. And surprise, surprise, who is the biggest client of Robinhood's data? Citadel. And so when Vlad said we're acting on our client's best interest, well, the client is defined as somebody who actually pays for your services, and Robinhood users have zero commission. So it kind of makes sense that they were acting in Citadel's best interest.
Most likely, yes. It feels like basically Vlad was put in front of the fact, whatever it means in English. I know I can say all these hedge funds and the Melvin Citadel and everything just came to him and said, you just need to stop trading, come up with whatever reasoning you want to come up with, but it needs to stop. Maybe, just maybe.
That's, well, the day that they stopped trading, I think they're just making it worse on themselves actually now, because so Thursday when they stopped trading, hedge funds were up 140% on their short because it went from $400 down to $250. And now they're restricting it, but they're not only restricting GameStop, they're restricting a whole bunch of stocks, some of them that I own, which is pissing me off because they're saying, hey, if you want to buy Beyond Meat, who it has nothing to do with this whole squeeze, you can only buy one share. And that's just a slap in the face of all these retail investors. And they're just, I think, digging their hole bigger and bigger, because if you look at the Google trends for people searching to leave Robinhood, it is at its all-time high ever. And then on the other hand, if you look at the regulations, like Vlad and Robinhood could have pulled something like this off if it wasn't such a high-profile case, But the fact that billionaire investors like Elon tweeted about this, Chamath invested, Ross Gerber invested, the Winklevoss twins invested, legislators, Elizabeth Warren was on CNBC talking about it. You had AOC and Ted Cruz both talking about more legislation. The fact that you have this many eyes on this issue just means that you can't really get away with it, because I think Republicans have already started a hearing on Robinhood specifically, because there has to be some very legitimate reasons for you to be able to do this, because if not, then it's clear market manipulation, right? If you don't let me buy and sell a certain security, like who's to say that if they don't provide the reason, right? Who's to say that in 6 months from now, they stop you from buying Apple? They stop you from buying Tesla. They stop you from buying whatever they want, And so it's like, from a client point of view, what kind of trust do you still have in that broker? Right?
Yes, RobinHood, obviously we're from Canada and everything. So, by the way, which one are you using? Are you using Wealthsimple to invest or no?
So I use both Wealth. I'm actually transferring a lot of my funds over to Questrade.
Questrade, yes, that's what I thought. So Questrade. So my question is: so majority of stocks that you are holding are US dollars stocks. So you are buying them using Canadian dollars, like just forget about the exchange rate, or you found a way how to kind of avoid it and deposit some US dollars, no?
Yeah, so I think this is applicable. This is the reason why I'm switching over to Questrade, is because Wealth has zero commissions, but if you really read into it, it's very deceptive, because they have zero commissions. They'll save you from the $5 or $10 commission that you would pay with Wealthsimple, or with Questrade. But with Wealthsimple, they always keep your reserve funds in Canadian dollars. So let's say you have 500 Canadian dollars, you buy one share of Apple, they do a conversion on that and they charge you whatever it is, $20 for the conversion. And then when you sell that one share of Apple, they do the conversion again to Canadian dollars. Yes. So if you're buying and selling, like I wanted to sell my Amazon position, and it was like 3 or 4 shares or something like that. And it would have cost me like $70 just to sell that position. And it's like, well, thanks guys for being zero commission. Like I'm getting screwed on conversion. Yes. And so what Wealthsimple does, or what Questrade does, is it charges you $5 or $10 of commission for every trade, but it always keeps your reserves in US dollars. So if I sell a position, they don't do the conversion fee again.
So long story short, your Questrade account is still in Canadian dollars, yes, as far as I understand, because I'm just using.
No, it's in US.
So you can deposit US dollars in Questrade.
So if you deposit in Questrade, the first time you deposit in Questrade, they'll do the conversion Canadian to US. Right? When you buy the first stock in US. When you sell that stock, they'll give you that money in US, and you can hold it both Canadian and US dollars. They won't do the conversion every time. So basically the rule of thumb is, if you're buying and holding and you literally are not selling for years and years, then sure, use Wealthsimple. Okay. But if you're buying and selling like every couple of months or every year or whatever, then use Questrade, because it's net easier, like it's better for your money.
So for example, what I was saying, because let's say, so if I have US dollars account, because in Wealthsimple I can only basically deposit Canadian dollars as far as I know right now. But in Questrade, can I use my Canadian bank? In Canadian bank, I have US dollars account. Can I deposit US dollars from US dollars Canadian bank into Questrade? I was just thinking. I think so. I was just thinking that maybe whenever we have like a correction or something, I'll just put this in Questrade, just in like VTI and VOO, and just let them work, because they're just doing and generating like 16 cents every 1 month.
Yeah, I mean, one thing you could also do is Norbert's Gambit. If you just Google it.
Yeah, I heard about it, yes.
That's something that you can do. Questrade has great customer support, so you can just, call them and just ask. And I think that they do allow you to deposit in different currencies depending on where you're depositing from.
Okay, I'll figure this out as soon as I have correction or recession. Next one.
You want to hear about one trade that I made off of this whole GME AMC thing?
Okay, yeah, sure. That's what we're talking about here. So let's do it.
Yeah. So after looking at the Google trends for Robinhood and cancel Robinhood and transfer my brokerage and all of these trends, on I think it was Thursday. Yeah, Thursday, the day that they stopped doing it, I bought a lot of call options on SoFi. So the ticker symbol is IPOE. SoFi is one of Chamath Palihapitiya's SPACs that he introduced, I think, at the beginning of January. And it was getting beat up, right? Because all of these retail investors were focusing on GameStop and AMC. And in order to fund that, they were selling off SPACs. And so I managed to pick up IPOE at like $18 and I bought call options on them. With the idea that there's going to IPOE or SoFi is going to get so much positive attention from this whole cancel Robinhood situation that people are either going to transfer over or not. And it's interesting because Chamath went on Twitter and he started like publicly insulting Robinhood and asking all his followers to stop going to Robinhood. And he started promoting SoFi. And then a lot of other people jumped on this train. And, long story short, I was kind of kicking myself for not buying more, but I think I might on Monday.
You can buy call options with Quest Trade, yes, because simple, just buy,
exactly.
sell, that's it. Okay, maybe yes, this will be one of the more reasons. I tried to stay away. I so far succeeded in staying away from options, which I plan, I guess, to continue doing so. But just to play around to see how it works in person, and everything, to have first-hand experience, I might give it a try just once again to have fun. I'm not planning to make money with options, I think.
Options are a game changer, at least I found for me. I think like they're... Every time I see these investors, like I was watching the Dave Lee podcast with Emmett Peppers. I don't know if you've seen that one, but basically this guy had $2,600, $2,700 initial deposit. And over 10 years, he made, I think, like 30 million or something with just that initial deposit. And it was all options, right? Because the leverage that you put, like the maximum you can lose is 100%, sure. And that's risky, but the maximum you can win is something that you will not be able to. Okay, so for example, for my SoFi purchase, I could have bought stock at $18, and in that stock, I could have been up 30% because that's what it is up right now. But for my options, I'm up like 80 or 90% for my options trade. It's riskier, but I think if there's anybody watching that wants to try options, some great tips that I learned over the years was don't go super out of the money, go at the money for the strike price. And generally, if you want less volatility, like when I started options, I was very afraid to lose all my money, like I was gambling, but it's not, because it is gambling if you go very short term, like next week or next month options. But I almost always do leaps. So I almost always buy like 2022 or 2023 calls. And so that has less volatility on it, but it has still the same amount of upside potential.
Okay. And all these options are obviously American ones, so you do not need to wait until expiration to exercise the right. The American European options, yes? Difference.
I've never bought European options.
No, that's what I'm saying. So these are American options. You can basically, whenever it's convenient for you, don't need to wait. Okay, good. Just clarification and stuff. Okay, so far so good. Quest Trade, yes, I might give it a chance. So if there are any referral links to get my 3 free stocks on Webull to sign up the account and stuff, you can send it to me and I'll use it. But like I said, whenever there is a recession, correction, this is when I'm planning. I don't want to spend just everything now because Alex is speaking with me. So right now I think you have a feeling that there is some kind of like instability. So there is maybe a correction's going to happen soon. Maybe it is already happening. Maybe this whole Reddit thing started it a little bit. Let's see.
I mean, look, man, like the market's been down, 5% this week? Like that qualifies as a correction.
It's supposed to be 10, I think, no? So it was big drop in one day. Like my portfolio got -2.5, I think, just in one day, I think Friday or something. But before this, it was like normal. So I think in the week, I can even check it right now. So let's see. I'm pretty interested. So
I think NASDAQ was up for the week. I think it was the Dow that mostly got hit. But it makes sense. I posted about it on Instagram that because we're playing with billions of dollars of money for this GameStop situation, these hedge funds that are forced to sell their position, like to cover their shorts higher, are selling their long positions to funds. And so they're bringing down the whole market, basically.
I also believe it is the reason basically why it's happening right now. So most likely it is. So let's see how it goes. But I think for me, 5% is not too much because basically 5% you can get it like in 1 week, maybe in 1 day you can get it all back. So it's not too much for me. I'll wait more.
Yeah, I mean, I'm just buying stuff. I have, some cash on the side. I think the main thing that I'm doing is taking a look at what companies I own that are more speculative than others, that don't have any profits, that have maybe a higher percentage of debt to their cash positions. That's how I'm sort of, trimming positions. It's not like, so one of the companies that I invested in that I'm very bullish on is Lemonade, and Lemonade is up, I think like 130, 140% for me. I don't necessarily want to sell that, but I'm not adding more. Like Tesla is another one, right? Like my cost average for Tesla is like, 300, I think it is. And so, but I'm not selling it, and I'm not buying, like I wasn't buying any more Tesla since it was 550. And so it just becomes like, it goes from this position of it's up a lot to maybe becoming a hold. Like if I think Tesla is overvalued now, I'm just holding it. Like I'm not selling it because I can't get that 300 cost basis anymore.
Well, let's see. Tesla is suffering right now. Recently, the report was not so good. Like what's like under 800 right now, I think, yes, if I'm not mistaken. So let's see. I'm still most likely not going to open any Tesla positions for obvious reasons. But if it goes maybe like under 300, under 400, I will take a serious look at this. So let's see. So yeah, we can answer this guy basically you can write in the chat. I can duplicate it. So the guy asks, so simple or Quest trade?
Yeah, I just responded to him.
I'll just do it also like this. So whenever the live stream is recorded, because I don't know if there will be chat available. So long story short, if you just want to buy and hold, I guess it's simple to make my answer as simple as possible. If you just buy and hold, especially if you just invest like in ETFs and everything, just buy and hold. Simple. Commission-free trading, you will lose some money on the exchange rate, but that's it, you just buy and hold. But if you do more transactions, like weekly, monthly, buy, hold, buy, sell, then according to Tevis, it's Quest trade is better.
Yeah, and also, if you're also only buying Canadian securities, then that's also simple because you don't have the exchange rate there.
My only one Canadian is Bank of Montreal.
I don't know if I have any. Oh, I do have some. I have this small gold mining company that's, I think, up like 200 or 300% for me.
just 200, 300, not a big deal.
Yeah, they haven't started actually mining yet. They just set up their operations, and the stock was like $1. And so now it's like $3 or something like that.
And the same guy, Nagras Magrebe, asks if you can explain options, please. So I can give the basic definition because I am, like I said, I kind of know what they are, but I never had personal experience with options. And then
I can explain them too, if you want me to.
I can start, you can continue, so it's the two of us. So there are, to begin with, two main options that you need to know about. And by the way, all these explanations, what are options, what are derivatives, what is a stock market, what is a short squeeze, all of this, majority of this, it's on my YouTube channel. I have my straight to the point series where I just basically explain these terms, just like you ask, what is an option? And I explain it in like 2-3 minutes. So there are two options, and I did this what is call option and what is a put option. I think previous week I had these videos, but I don't mind just saying it again. So two main different options, call option and put option. Put option, you can think about this, like I know it, you can think about this as a insurance basically. So for example, you own stocks, let's say, and you think that it might drop in value. So right now Apple is like 130, let's say. So you think that Apple might be 110 within next 2 weeks. So you buy a put option with the strike price of, let's say, 125. So just in case if Apple price actually goes below 125, goes to 110, 90, 80, you still have the right to exercise your put option right and still sell at this strike price of $125. So put option is like an insurance basically. Whatever strike price of put option is, this is the minimum price that you can sell your put option, shares for. If the price goes up, you just let this option expire worthless. But this the price of insurance basically. You buy car insurance. If you don't get into accident, you still need to pay the premium. But if you are in the accident, the insurance company pays you basically whatever amount is necessary to repairs and based on your insurance policy. And call option is the opposite. This is kind of a down payment. So for example, if you expect that the stock will increase in value, and right now Apple is like 130, you think it's going to be 170, but you're afraid that, okay, I'm going to buy Apple now, and then the next week it's going to fall all the way to $90, like all the investors basically basic fear of investing. You just buy, everything falls. So you can buy call options, which is like 130 is the price right now. You buy call option with the strike price 135, for example. And if indeed the price of Apple goes to 150, 160, you exercise your right and you still buy Apple shares at a strike price of 135. But if the price goes down, like you expected, like you was afraid of, like goes to 80, 90, you just let it expire worthless. You don't need to do anything, don't need to buy Apple shares and just basically pay the premium. Basically, that's it. Very simple explanation. And now, Davis, if you want, you can get more in details, more advanced options knowledge.
Well, I think, yeah, it's very easy to get lost in the terminology of options. I think the best way I've heard it being explained is in the form of an analogy. So say you have a house, and near that house there is, a football stadium that's going to be built.
Mm-hmm.
And I come and I knock on the door and I say, hey, Artem, your house is, worth $1 million.
Mm-hmm.
Okay. I'll pay you $50,000 today to make a contract so that in 3 years you sell me this house for $1 million.
Mm-hmm.
Right. And you say, okay, well, I'm going to sell this house anyways. So cool. Okay. In 3 years, I'll sell it to you for $1 million. And then you get $50,000 you put in your pocket.
Mm-hmm.
Right.
Mm-hmm.
That $50,000 is the premium.
Mm-hmm.
The $1 million is the strike price. Now, let's say the stadium gets built and 3 years passes. And because of there's so much interest in that neighborhood, the house is now worth $3 million. It's not worth $1 million anymore. You, unfortunately, are forced by contract to sell me the house for $1 million because you already got paid the $50,000 up front.
Mm-hmm.
So you're missing out on this $2 million potential gain. Mm-hmm. Me, on the other hand, I paid $50,000 for this contract.
Mm-hmm.
Now, this contract says that whoever holds this contract gets to buy the house for $1 million, regardless of what it is on the market.
Mm-hmm.
So now I can go and sell this contract to somebody else for more money.
Mm-hmm.
So I say, hey, the house is worth $3 million. I paid $50,000 for this contract. I will sell it to, this other person for, 2.5 million.
Mm-hmm.
Okay. Or
Mm-hmm.
2.5 million.
Mm-hmm.
And so whoever buys this contract now doesn't buy the house for 3 million. They buy it for 2.5 million
Mm-hmm.
because they have the contract, right?
Yes.
And so this is a way that I can leverage my 50,000 to make potentially millions because I am buying the right to purchase a stock at a certain price at a certain time. But on the other hand, let's say 3 years passes and the house is not worth 3 million. Let's say the house falls in value if it's worth 800,000. Then nobody will be interested in my contract for to buy it from me because they can buy the house on the open market for less than the $1 million initial price. And so that's a good way that I've heard of it being explained, is just showing that it's you create a contract for the right to purchase a security, and you don't have to necessarily purchase that security, but you can trade that contract with the market. And so it's a way to, it's like a derivative essentially of the stock. It's like a stock market on top of a stock market.
Yes. It is a derivative, yes, because options is basically, it is a derivative. Like, let's say, so stocks, bonds, these are all securities. And among securities, just the general name for stocks and bonds. Stocks are equities and bonds are fixed income securities. And the same thing with the options and derivatives. Derivatives is the general name for options, futures, forwards, swaps. And basically options is just the category of a derivatives, and derivatives is basically options. It derives its value from its underlying security. That's why it's a derivative. And that's all there is to it basically. And that's why it's called an option. Like Davis said, like I mentioned, it's not, you do not have to, it's not your obligation to exercise your right and to buy or sell stocks. You can choose to do it or not to do it. That's why it's an option. That's why it's basically called option. So that's all there is to it. It's complicated at first, confusing, definitely confusing as far as we go to long put, short call, and all this kind of get more confusing. We're not going to go there, I guess. But it is confusing at first, but then when you get the hang of it, especially when you get some experience trading them, investing in them, then it gets easier. But basically, and if you want more information, just go to my YouTube, straight to the point series, 152 videos, I guess already I got 400 more, I think, coming, 300, I think, more at least. So you will learn.
That type of leverage is the only way that somebody like this deep effing value guy could make the percentage returns that he did, right? Because if you bet 50,000, there is no way you're going to get 48 million by just buying the stock. Because when he bought the options, he bought them for pennies, and because the stock was, let's say, $4, and nobody thought that in 2 years it's going to go to $20. And so he bought those options for like 5 cents or 10 cents. And when the stock went to $400, all of a sudden they're not worth 5 cents anymore. They're worth the difference between $20 and $400, like $380. And so that's how you get 10,000x return versus, a 10x return.
These are one traits that you need in your life to just retire from trading.
Yeah, exactly.
Hopefully some of us will get these trades as well eventually. Maybe not in this magnificent scale, but at least partially. Will be good to have.
Well, it's quite interesting to see on the WallStreetBets Reddit server, because he's not selling. And on Thursday and Friday, like, he lost $14 million in a day, and he's still not selling. He just refuses to sell. And well, we'll see how it ends, positively or negatively. But the short interest on GameStop is still like 100%, right? Like, because as the price rises, like, there's more shorts coming, buying or selling the stock. And so the real short has not even, like, the short squeeze hasn't even started. And so he's just holding it still. I don't know if it's ever going to squeeze even more. Like, some people are thinking GameStop is going to go to 1,000. And theoretically, it's possible if the short squeeze happens. But I don't know if, the retail investors have that much gas in the tank. I hope they do.
That's why I'm showing right now. I don't know if you're watching my YouTube stream or just using Zoom, because every time he's making his like reports, daily reports about his portfolio value and everything, people say if he's still in, I'm still in. You see? I don't know if you're still seeing.
Yeah, I have both.
So basically, no, I know this one is the best one. If he's still in, I'm in, and people just hold because he's holding. I think as soon as he sells, this is when we're going to see the end of this whole thing. I don't know if he's going to sell. I don't know if he's just the principal, if he's about the this Joker, it's not about the money, it's about sending the message.
Well, so he's become sort of a symbol for this whole community. And the moment that he sells, it's over. All of Wall Street Bets is going to sell.
That's what I'm saying, yes. He's the Joker.
Yeah, exactly.
Just how's it? View full page. It's not about the money, it's about sending a message. My stream is delayed on YouTube, so you hear it now in my Zoom, but people will see it soon. But whatever, yes. Okay, so very interesting. Definitely very interesting what's happening right now in the stock market. Definitely, I think fundamental analysis, I think it's extremely irrelevant to speak about fundamental analysis of GameStop. Technical analysis as well. I think just right now it's just the hype, just the principles of people who are holding this, and yes, basically all the way until if the guy is gonna continue holding, for how long he's gonna hold, and as soon as he sells, that's gonna be it, I guess.
Yeah, I mean, the really exciting takeaway here is not GameStop itself. It's not like GameStop is a catalyst, right, for this whole movement, because what was really interesting to see was what happened as a result of this GameStop going up, and how Wall Street responded to it, how the mainstream finance media responded to it, how CNBC and Bloomberg and all these other guys responded. And how they responded was this very confrontational, like, let's block them from being able to buy the stock, which that's not the correct response, because what it's going to do, it's going to alienate this community more. And retail, like, there's a clear divide between retail investors and hedge funds now. And they cannot do this for long. Like, the mainstream finance media cannot have this alienation for long, because they literally cannot block all the stocks in the market that have a high percent short interest. Yeah, sure, they can block GameStop, they can block AMC, but who is to say that next week, BlackBerry won't become the new target, or the week after that, some other stock will become the new target? It'll happen again and again and again. And so this is what Chamath was saying on CNBC when he had that interview. He was saying that the real change that must happen here is with regards to regulations. Like, you have to make it, you have to put rules on these hedge funds for how much they can short. Like, that is the root problem. It's not like, don't blame me for exploiting the problem for existing, fix the problem.
Exactly. So, yes, absolutely. Let's see how it's gonna be. Very controversial week it was on the stock market. Let's see how it's gonna be next week. I guess it's absolutely speculations what we're gonna say right now. It's either can continue, it either can die, basically it's slow down and everything. It can even get crazier than this. It can actually maybe go to $1,000 per share, or it might just stay in $300 range. So, like, literally there is no way of predicting. Even if company will be making sense from fundamental, from technical analysis perspective standpoint, still you cannot predict what's gonna price be next week, let alone trying to predict the price of GameStop next week. It's literally a pure casino right now at this point. So all those people who are watching, if you want to buy GameStop, you know that this is a casino. It's literally 50-50 chance you're gonna win or lose, and there's no way of saying for sure what's gonna happen. Only deep freaking value knows what's gonna happen next week. I think at least he knows one outcome. At least he knows when the price of the stock will decrease back to like $5. This is the only thing he knows for sure, I guess, when he's gonna sell.
Well, yeah, I mean, so there will be a day that GameStop is going to dump, like a coordinated effort on Wall Street Bets part, that their attention goes away from GameStop and it goes towards something else. And that's going to be the day that the stock price falls from 300 or 200, it falls all the way down to 50. That will happen, right? Because this is like, we're not going to be 6 months from now and still see GameStop at 400. Like, it's not going to happen because there's no fundamental basis. We all know that there's no fundamental basis, but the point is that there doesn't need to be a fundamental basis because it's a momentum trade.
Yes.
And they only need to stay in GameStop until the contracts expire for these hedge funds, until the shorts expire. And the higher that they drive the price, the more these short sellers are forced to cover their positions, right? Because the short sellers borrow their shares from their broker. And if I'm own GameStop and my broker takes my shares and lends them to a hedge fund who then sells them in the market hoping that it's going to go down, and GameStop goes up, I then contact my broker and I say, hey, I want to sell my GameStop. And my broker is forced to go to the hedge fund and say, hey, give me back those shares. And the hedge fund is then forced to buy higher. And so there's this whole dynamic. But Citron Research essentially lost 100% of their position. They went completely out of this trade. Melvin Capital, I think there's been rumors that they're going bankrupt. Because even the money that was lent to them by Citadel is now gone. And so there's rumors that they can go bankrupt as early as next week. So it really depends on which side gives up first. It could be Wall Street Bets on one side, but the problem is that it's not even become a battle of retail versus hedge funds anymore. It's become a battle of hedge funds versus hedge funds, because even on the long side of Wall Street Bets, there's other hedge funds that are now supporting. There's other billionaires, there's other powerful connected people that are now supporting this. And it just makes the whole problem a lot more, complicated, because it's not a black and white clear cut issue anymore. It's like just this gray, it's like, what connections do you have versus what connections do I have? And they're all powerful hedge funds. And so it really depends on which side gives up first for this thing to go to 1,000 or to go to 50. But even if it does go to 1,000, it's going to go to 50 shortly after that, because after the squeeze happens, then everybody's going to sell and it's going to deflate. Like it's not going to be sustained either direction, is what I'm saying.
And also, I'm not sure, they were having sell limits previously at obviously for 2069. Then I don't know, you've seen as soon as price was getting very close to this, they're all selling like cancel your limits. So maybe right now they have this like $1,000 limit or whatever. And maybe at that time they're not gonna say anymore like cancel your limits, Maybe 1,000 is the final price that we're gonna see, which means that as soon as we're gonna see close to 1,000, some people will be like, okay, I will sell at 990. Some people will say, okay, maybe some people will sell at 990, so I will sell at 980, and then I will sell at 970. And so maybe we'll not even reach 1,000. Let's see.
Yeah, but it's not even up to the longs anymore to determine what that peak price is. It's up to the hedge funds that cover, right? Like the price, even if I sell at 800, the price can still keep going up because these hedge funds are still buying the stock, unfortunately, because they have to close out their position.
So yes, next week I think is gonna be, and I think unfortunately Wall Street Bets will give up first, because hedge funds, they're like serious people and everything. They're like, of course I'm rooting for Wall Street Bets, but I think that the hedge funds are more serious about their money and everything. I think Wall Street Bets, eventually if there is like some kind of wave of people start selling, price reaches below 200 and maybe it will die eventually. Deep freaking value will say like nothing. He'll just post his another daily report when his portfolio value is going to be like 20 million already, and then maybe around 10 million he will sell everything, or like under 10 million he will sell everything, which is going to be right now 4 times the price. So as soon as the price, I guess, under $100, I think that's going to be the end of this whole saga, unfortunately.
I think you're giving a lot of credit to hedge funds, man, because hedge funds really showed their hand, in my opinion, around Wednesday, when they started, like, there was like bots that was spamming Wall Street Bets. There was their Discord server got shut down. There was people on CNBC literally telling you to not buy it. All the brokers stuff, like all of these actions, you have to operate under this assumption that things are connected, because in reality, things are connected. And so once you see all of these reactions, like, I would agree with you to say hedge funds are going to win if there was none of this stuff happening, if no brokers limited it, if no trouble happened with like the Wall Street Bets, like Discords and Reddits, and like if nothing happened, I would say, okay, you know what? The hedge funds aren't really worried about it. But the fact that all of these things happened makes me believe, and the fact that, hedge funds are actually going bankrupt now makes me believe that they're not as bulletproof as you would think they are, right? Because these are billions of dollars billions and billions of dollars in at risk, right? And so I think that, you know, retail investors like Wall Street Bet. So Wall Street Bets, the Discord or the Reddit page, when this whole controversy started, they had about 2.3 million followers. If you go on Wall Street Bets right now, I think it's over 6 million.
7 already.
It's yeah. So that's my point. Like, there is a lot of retail investors, and a lot of them are very wealthy, and a lot of them, like, for example, I put out a tweet, I think last week, saying that, hey, I kind of want to put just $1,000 as a donation. Like, I'm not expecting gains from that money. I don't want, you know, returns. It's just a donation for myself to this cause. And the thing is that once they made it about a cause, the stories got very personal. It's not about GameStop anymore. It's about this, you know, big institution versus the little guy. And I think once you surround people around that cause, it makes it very, very personal and very hard for them to sell, because, you know, there were posts, they had an open letter to CNBC. They had, you know, different posts that saying, hey, look, you guys, you know, screwed over my family in 2008 crisis, where everybody that was, you know, on Wall Street had no repercussions, but then middle-class people got screwed. This is, you know, our revenge, so to speak. It sounds, you know, for some people it's a full reality. For other people, it just sounds silly, like a justification. Whatever it is, you know, the value of something is whatever somebody is willing to pay for it. It's whatever somebody perceives it to be. And so if nobody sells, if people hold, then I think from what we've seen in the last week, that there is a good chance that these hedge funds are the first to go. But I'm not sure, you know?
So I understand it is getting personal already, definitely. Like, there is no diamond hands and all this kind of stuff. I understand, and that's why, like, I'm saying, I'm rooting for Wall Street Bets, like, but unfortunately, especially because coming from Russia, I know, like, Americans, they like to stay for the riots and everything, but I know, if you know, there are some riots happening in Moscow, in Russia as well, because of this, like, the Putin's basically palace, let's say, so $2 billion mentioned basically. And so, but as Russian people, they're like, yeah, they go to the riots, and then everything basically goes silent, like everything dies, and basically back to normal, let's say. So, okay, so we as Russians, we do not try to defend our rights. We just got used being with Putin for more than 20 years already. Maybe that's why I'm giving up on Wall Street Bets so easily for now, even though I'm still rooting for them. So let's see if they win, what's gonna happen. But unfortunately, I think, yes, like, it is very hyped right now. Maybe it will be a little bit less next week, next month. Definitely, I think it's gonna be already all in the past. But let's see how it's gonna be. It's pure speculations at this point.
I mean, the thing that I'm more worried about is the general health of the market going into February because of this pullback. I think if the Wall Street Bets situation keeps going even more and more funds and institutions are forced to sell their long positions, that could be the thing that puts the market in a correction territory.
Well, you never know. There's always different reasons for corrections. So looks like this is one of them. And you never expect the correction. You never know that, okay, this is going to be the reason for correction. If you expect the correction, obviously you start selling before it happens. And basically this is how correction before correction happens, because you know it's going to happen. So you start selling and that's it. You never know. So this time, this was the reason for the correction. If it's going to happen, let's see next week.
Do we want to take a couple of questions if there is any?
So, yes, there is a person in the chat asking, I wish I knew how to even buy options, asked by Adam Miller. So, obviously, you need to have a broker which has access to options trading. So, I don't know where you're from, but if you're from Canada, Simple, for example, doesn't have options trading. So, you need to at least try Quest Trade. Or I think all these banks like Scotia Trade or whatever it's called, TD Trade, whatever they're called, they most likely, they have all this, sophisticated trading platform and stuff. But Quest Trade, it's more than enough basically to just use and to buy options. Quest Trade is more than enough if you're from Canada. But if you're from America, USA, I think you have way more options. Robinhood, I think, even allows options trading, if I'm not mistaken, like Charles Schwab, TD Ameritrade. I think they all offer options trading. And yes, if you have any questions, what's up, Yovar? I know the guy. I was living with him, my roommate from Florida. So yeah. So if there are any more questions, let us know, we'll answer. And after this, there is so Tevis was the representation of growth investing. Next, if Thomas is coming, he confirmed basically at 3:30. So basically next we're gonna have another speaker, Thomas Richmond from Get Rich with Richmond Instagram project page. He is the representation of value investing. So we're gonna see different perspective on this GameStop situation, both from growth investing and value investing perspective. Okay, looks like there are questions. First one is from Nagras. Unfortunately, sorry for mispronouncing, but I think it's called Maghrebi. Do you need to wait for any verification for with Simple and Quest Trade? If you're speaking about depositing money, if you're speaking about activating your account, I think I create my account like almost 1 year ago. I think it was immediately. But depositing money and withdrawing money, yes, it takes 3-5 days basically to clear your funds. So depositing money, it takes time, but creating an account and and buying and selling shares, if you're using market orders, it's basically immediately. So, and the second question is from Gabriel. What's up, Gabriel? Thank you for watching. He's Canadian friend here. Do you have a personal recommended ETF or stock that you like that is not GameStop or BlackBerry or the rest you spoke of? So it depends if you're a growth investor, if you're a value investor, if you're index fund investor. The simplest answer possible and the simplest solution possible is to just literally invest in ETFs, which is, for example, VTI, VOO. Simple, they have access to both of these. It's literally VTI is the total stock market index. You invest in every single company, publicly traded company of the USA. And VOO is you invest in 500 biggest companies. You invest in S&P 500 index basically fund. And that's it. One investment and you are done. Every single month deposit $1,000 more, buy as many shares as possible with this 1,000, you are done. Literally 2 minutes per month. If you want to get more sophisticated, more precise, if you want to play around, then of course you can feel free to select individual stocks. You can build your portfolio, and this is when things get different. If you're, for example, value investor, you just need basically to try to diversify, to have one company from each sector, or not one company from each sector, but each sector must be represented in the more or less same proportions in your portfolio. So 10% for technology, 10% for materials, 10% for energy, 10% for financials, and so on. This is let's say, best case scenario if you're a value investor. And from these sectors, you can basically select any company, 1-2 companies each sector. You can even use my spreadsheet, which is on my Patreon, and I think, it's on my Patreon, but Gabriel, you have access to Patreon, so you can download it. And this spreadsheet, it has companies by sectors. So there's financial sectors, 20-30 different companies to select from. So then you'll need to basically analyze them, take a look at them, financials, qualitative analysis, quantitative. These are all the things I teach basically during my presentations on my Patreon. So if you're watching recordings or if you're participating, you'll kind of know the basics, how to do it and stuff. But if you're a growth investor, this is where Tevis will answer more precise how you need to select companies if you're a growth investor. How would you select companies, Tevis?
Yeah, so I think from an ETF perspective, the best, so an ETF is exchange traded fund, I think it's called.
Yes.
It's basically a basket of different companies.
Mm-hmm.
So instead of buying, a small portion of 10 companies, you buy one clean ticker, and then you have a basket of different weighted companies. From an ETF perspective, I would say the best one for growth is anything by ARK. ARK-K is generally the safest ARK ETF you can buy, and that is ARKK.
Mm-hmm.
So Kathy Wood and the ARK Invest team focus on innovation specifically, and ARK-K is, so they have 5 different ETFs for finance, for next gen internet, for autonomous driving. They have all of these different sectors of innovation, sectors of disruption, and ARK-K is a summary. It's like an ETF of an ETF for that fund specifically. I would say that's the best one from an ETF perspective to buy. I think that's up quite a bunch year to date. Like I think it's up like something like 70% or something like that, or maybe 100% year to date, or for the last 12 months. And from an individual company perspective, the main things to look out for are market cap in relation to total addressable market and the opportunity for growth. So for example, there's companies that I've bought because they have, a 2 billion market cap versus all of their competitors are like 30, 40, 50 billion. And the company with a 2 billion market cap is doing, more search traffic than the other ones. Like that's a very clear sort of indication. It's basically all about the potential for growth in the future, like how much you think that this will grow realistically based on their sales. So a comparison that I always do with Tesla for growth investing is, well, think about how many cars they'll sell. They're selling, let's say 500,000 cars today, of course, but they have the runway. The market for electric vehicles in 2030 is going to be, let's say, 40 million cars. And Tesla alone has 85% of all electric cars sold. And even let's say out of this 40 million, if we're being conservative, and let's say Tesla sells 30 million. Okay, 30 million cars at an average selling price of 35,000 per car, that value, what is it, like 1 trillion, something like that? It dictates that in revenue alone, in 10 years, the value of the company will be much, much, much higher than it is today. And so just that kind of mental math to say, well, first of all, is it feasible? Is it realistic that they're going to get there? And if so, do they have the right management team? Do they have a lot of access to capital? Like, can they raise money whenever they need to? Do they have debt? Yes or no? How good is their balance sheet health? And so these are things that it's like, well, fundamentals mixed in with growth potential. So what I've done is I've taken a look every year. I have spreadsheets and I do like my 50 favorite stocks. And in a video that I made, I put it up on YouTube a couple of weeks ago. It has my top 10 growth stocks for 2021. And those companies that I selected in that video have almost all of them have under 100 billion market cap. I actually want to change my own portfolio, Gabriel, to make it so that I only invest in companies that are under 100 billion, just because they have more opportunity for growth. Like I hold Apple, but Apple is 2.4 trillion. Like there's not a very high chance of Apple doubling. Exactly. But if I hold like Lemonade, it's 10 billion, it can double tomorrow. And so that's the whole idea. And so in this video, I analyze and talk about 10 different companies that are under 100 billion that are my favorite investing ideas for 2021. And I explain in that video also why I love them, like the individual bull thesis for all these companies. And you can find that on my YouTube channel as well.
Which is right here. Yes, I'm showing it.
Oh, okay, cool.
So do you think we can invite Thomas? So it's three of us? Or you need to go somewhere, or you're in a rush somewhere, you still have time? I do need to go, but okay. I mean, you can invite Thomas and then, carry this conversation on with him. Okay, no problem, because we're planning to do at 3:30 with him, but like it's chill stream, it's no rush, like I'm just asking if you need to go anywhere, but of course, feel free to stay. I think it will be way more fun if it's three of us. So I will, since I think you are you're the creator of the stream or whatever it's called, so I guess you will need to invite him. Just give me a second.
You or Thomas should make the invitation, because I'm probably going to head out like 10 minutes and then it'll like crash the whole call, I think.
Okay, so is your Zoom right now, is it paid or it's free version?
No, it's the free version.
Because you remember like a couple of months ago, like half year ago, Zoom was limiting to 45 minutes, but looks like not anymore.
I think they canceled that because of COVID.
Yes, good. Because, very good. So, So do you want me to invite you for like these 10 minutes, or we're supposed to already kind of
Well,
stop?
I have to like I actually only plan to be on this call until 3:30.
So I guess that's the ending point for us here now.
Yeah. But honestly, it was a lot of fun, which is why I stayed for 20 extra minutes. I think that it was a good chat. I think that GameStop and AMC have absolutely been a reality TV show for the market. In the past week, it's going to be interesting to see where it ends. Like I said, I'm going to be releasing an in-depth video on Tuesday that has essentially all of the homework that I've done on the behind the scenes with all of these hedge funds, supporting each other. And I think it's helpful to see from a retail investor perspective because it really shows a lot of what's going on in the market right now that people who are just starting out investing don't really know. Like there's some power struggles at play here that have been at play for decades and people haven't really been aware of them until now. So whether we see some form of change come from this situation or not, that's a conversation for next week. But I think that this had to happen. It's not a GameStop thing. It's not an AMC thing. Those are just the catalysts.
Yes.
But this tension that had been building up had to happen.
Yes.
And so I'm glad that it did because it opened up a lot of questions and it opened the eyes of a lot of retail investors as to how much manipulation actually goes on, behind the scenes from big institutions.
Yeah, and
so
this was this was kind of good thing that they got their eyes open, but unfortunately looks like another bad thing that people will open their eyes. It's that you cannot invest in hype stocks because so many people now invest in GameStop, and whenever it's gonna crash, most likely it's gonna be inevitable, the crash. People will lose hundreds of thousands, some people lose hundreds of thousands, and this will be a very expensive lesson for them, unfortunately.
I mean, I think to some extent the WallStreetBets community is used to losing that much money. But all of these other people that sort of jumped in the hype, and that's sort of a reminder because I have people on my Instagram and YouTube always messaging me. Like I had them messaging me this week, and these are people that have never invested a day in their life, and they say, "Hey, Tevis, like you're a growth investor. Should I buy GameStop?" And I'm like, well, just because like I'm a growth investor, but I don't do stupid shit. Like I'm not gonna, just buy something because like there's no fundamental basis for GameStop to be a $22 billion company. Like GameStop is bigger than Beyond Meat. GameStop is bigger. It's bigger than Lyft.
It's the biggest Russell 2000 company, if I'm not mistaken.
So exactly, and there's no case. Like I would have made a case for GameStop to be a very strong contender for a $15 company or a $20 company, not a $400 company.
420. Don't forget.
All I'll say is be very careful buying into the hype.
Yes.
And know what you're buying into. It's not a value or growth investor conversation. It's stupid versus, smart in the sense of like, know that you're making a bet and not an investment. I'm not saying don't invest in GameStop. Do it if you want to. I don't care. Buy call options if you want to, but know the risk.
It is pure gamble at this point, like literally.
Yeah.
Sometimes people say when you hear something on the news, and we're speaking about stock market, if you hear some stocks exploding on the news, it means it's too late. But I think even this phrase is not applicable in GameStop, because when it's normal market conditions, if one company exploded and there is all over the news, it's kind of okay. It makes sense maybe from technical, fundamental perspective and stuff. Maybe it was a huge report. Maybe they delivered some, I don't know, super new record of out of deliveries, I don't know, whatever it is. Yes, okay. But in GameStop situation, I think even this phrase is not relevant. It's all over the news, but it can still go to $1,000, and because it is so unique event, and we never know what's gonna happen, only next week will show.
Yeah, exactly.
Pure casino.
I think on that note, I'm gonna head out. But thanks for having me, and for everyone for watching. And if you want to watch that video on Tuesday, that's on my channel. It's been on Artem's background the whole video.
The whole time.
And yeah, I'm also on Instagram.
Fundamentals of investing, self-explanatory. Fundamentals of investing and underscores, I think, in between there.
Yeah, exactly.
So yeah, everyone follow him. Very smart growth investor, very smart guy, very smart in finance, in investing. so many good news. And I am, like I said, I told you, I am watching your stories every single day just to get ideas. So some of the companies that I put on my watch list is because of your stories. So thank you for this as well. Okay, I guess.
Enjoy your time with Thomas. I think you're gonna have to make a new Zoom call.
I will
or Thomas
call him right now. Yes, I will call him right
cool.
now. He's already asking for the invitation. He cannot wait to share his knowledge. Okay, thank you so much. Have a good rest of the day, Tevis.
Thanks, man. See you, everybody.
See you. Okay, what's up, everyone? My name is Artem Dikarev, and in a couple of minutes you will know what is a Zoom call. Okay, now we're gonna invite our friend Thomas, and we're gonna speak now with the representative of value investing. Let's see what he is thinking about all this thing. Like, tak. I'm sorry, I'm not very technological person, so I have no idea how to add people here. No, it's not him. Okay. Let's do it like this, I guess. This is me. And this is gonna be my... I think I need to do this just for the security purposes. Okay. Inviting Thomas right now to my Zoom call. Stay tuned, because now we're gonna see the thing about the GameStop, because the thing about the AMC, about Nokia, about all these things from value investing perspective. And I just invited Thomas. So Thomas, if you're watching the stream, I just send you the link, check your inbox, check your email. Okay, in the meantime, while we're waiting for Thomas to join, let's see what we can do. Let's see fun stuff. Let's see fun stuff. What's fun? What's fun for you? Do you like cats? Do you like cat videos? For Thomas to join, let's see what we can do. Let's see fun stuff.
What's up, man?
Oh, and I think Thomas already joined. It was quick. Okay, Thomas, what's up? Are you on the moon already?
Yeah, man.
Tak. It's just the very first stream I'm doing, so there might be some technological difficulties. But I think we're good right now. I think we have you, we see you. My picture is in the bottom. For some reason, when you're streaming on YouTube, I don't know if you've been trying to do it, for some reason with the software that I'm using, OBS, you cannot accept Zoom calls and use your camera. So that's why I cannot start my camera right now. It says cannot start video. So
Gotcha.
yes, thing to know. Well, you cannot be prepared for everything, so that's the price. Okay,
Gotcha.
So yes, now we have Thomas. I'm just doing the introduction and everything. Thomas from Instagram community. Page name is Get Rich with Richmond. If you want, you can duplicate this in the chat. I don't mind, self-advertise, like no worries. So the guy is the biggest representation of value investing community that I've seen so far. The guy even wrote the Bible of investing called Value Bible, which I also read. So whenever I was in Colombia, I was reading Tevis's book and your book. These were my two books because I just downloaded them. There was no internet. I actually read your whole book. Very interesting.
I appreciate it.
Very simply written. Very like, just like you're talking with me. No complicated stuff, no complicated words, no complicated terms, like straight to the point, everything. Very well written book as well. Very easy to read. And I think it's not like just, your typical book with like the page, like with the 12 font, small font, and you just read it for like 5 minutes, one page. Very easy. Like I think I read your book like in a couple of days. Very easy, very nice to read. I enjoyed it a lot. Thank you for sharing it with me. The book is in Thomas's Instagram page, which is once again Get Rich with Richmond. You can download it there and enjoy the book. And yes, value investor. we all heard now the perspective about the whole GameStop situation from growth investing perspective. I guess you've been watching, I guess now with me and Teres, yes. Now let's hear what value investors have to say about all this whole GameStop stuff. Okay, so what's your first reaction about what's happening?
First reaction, man. Well, thank you very much for having me on the show. I've been watching the live stream. Loved what Tivas had to say. Honored to be on the first show. Yeah, what's going on with the GameStop, Nokia, all the stocks, AMC,
Yes.
all going nuts. I mean, to be honest, I haven't really been following the news much. I've I'm on Instagram at Garage with Richmond, so I'm scrolling through my feed sometimes.
Mhm.
That's where I get most of my news,
Mm-hmm.
and a lot of people have been talking about it. So I've heard a little bit here and there about it. I've heard a little bit about the little battle between the retail investors and the big hedge funds, and I've heard a little bit about it. But I've just been staying out of all of it. That's been kind of my take on it.
That's what value investor would say.
Yeah.
That's exactly what would value investors say, because one of the first principles of value investing is to stay away from all this stock market noise, from all this news and everything, and just keep doing whatever you are doing, investing in good undervalued companies, hold them long, wait for them to explode in the nearest future, which will most likely, majority of them will eventually do it. And that's it. And avoid all this market noise, which can be extremely tempting to invest in GameStop. Like, I think in 1 week, last week, it got like 900% growth in 1 week, 900% growth. Unbelievable. Like, when you see numbers like this, like, it gets tempting. It gets tempting when you see growth of 100% per month. When you see a company that grew 100% 1 month, it gets tempting. Imagine how tempting it is to see a company which grew 900% in 1 week. So, but because I'm also deep to my core value investor and everything, even though I accept growth companies in my portfolio and recovering companies, I was able to withstand this temptation and not invest in GameStop, not invest in AMC, not invest in Nokia and BlackBerry, in Bed Bath & Beyond and all these companies that been on every other investor's basically tongue the whole week basically.
Yeah, man, that's good.
But this guy who started this whole thing, it all started with Reddit, basically, okay? I guess you're familiar with Reddit, WallStreetBets and everything, yes? So this guy who started this whole thing, right now, if I'm not mistaken, if I'm correct, his only investment is in one company, which is GameStop. And he started building his position in GameStop, I think, since September 2019, if I'm not mistaken. So even before the virus happened and all these kind of things. And right now, if I'm not mistaken, his portfolio is like $48 million, which is unbelievable. And this is not even the end goal, because I don't know if he set the target price of $1,000 or maybe just the Reddit community which did this, but they are waiting for $1,000. This is
so I have a question about that.
Yes.
So back in September 2019, was he buying GameStop because he realized hedge funds had overshorted the stock, or what kind of drew him to make that investment?
So long story short, yes. I am not dealing with options because normal value investors, they do not do options trading. So basically, I'm not doing this. But I know the basic principles of how they work. I might just play around with them because, no one prohibits, if you're a value investor, to play around with options. Just deposit like $500, pretend you're going to lose them all, and that's it. Just play around with them. So maybe I'm going to do this in the future. So what I'm saying is that he did not buy stocks themselves. He bought call options. And do you know what is a call option, or I can explain what is this?
I kind of get it.
Okay, so just in case for those people who might not know it and to refresh for you, I guess, call option is basically the right to buy an option with the price that it's the strike price of this option. So for example, in September of 19, the strike price of this call options was like $8 per share for GameStop. And right now, basically, the price is like, let's say, 350, let's say. So that he can exercise his option right, which is to buy GameStop shares at $8 each and then resell them immediately at 350 each. So basically this is what call options do. It's like kind of the down payment for the stock. You pay the premium, and in case the price indeed goes above the strike price of an option, and strike price of an option that he was having in September, at least I don't know what's the strike price of new options that he has. So at that time it was $8. So right now, if he is to exercise his call option rights, he can basically buy GameStop at $8, resell them immediately $350, and basically make millions of dollars. And this is what he did. He did not buy stocks themselves. He bought call options. Maybe he also bought stocks along the way, but definitely he was buying more and more call options when the virus thing happened, when the GameStop became even more cheap, like $4. So he was buying maybe new call options with like $4 strike price and everything like this. Eventually he built this whole portfolio, which is, like I said, now is valued at $46 million. And it's very, I don't know, he must have nerves of steel, because like in one day, like I think from Thursday to Friday or something, he lost 14 millions in one day. Can you imagine? Like right now, if you have your portfolio, I don't know, you see like you lost $200, you kind of feel nervous. The guy lost 14 millions in one day, and he's still holding. So he must have very big nerves of steel.
Crazy.
So yes, this is what happened. His idea about this whole thing was that he was thinking that yes, the GameStop shares were way too shorted to begin with, even though the company was not it was not that case. It was not the company that was gonna absolutely be eliminated, delisted from the stock exchange. It was the company that was barely surviving, but it was surviving. And then he was started buying call options and all these kind of things. And then eventually good news started coming, including some of these news are that there was partnership between Microsoft and GameStop. So literally Microsoft became partners with GameStop under, I don't remember which conditions and everything. Then Michael Burry, that I was started to speak about, the guy before I even joined the call with Tavis, is the guy responsible for discovering the financial crisis of 2008. He was one of the first ones to realize that we will have this financial crisis before it even happened. And he was saying that GameStop is very unfairly treated, let's say, so company. So it's short sold. The company was way too oversold, let's say, over short sold, if it makes sense. And so he was also making statements that it was unfair treatment to the company. And this guy from the Reddit was building portfolio, and eventually, when more and more good news started coming, the stock price started increasing. People start basically noticing this, and this guy, he was doing like in the beginning, I think he was doing either weekly or monthly reports. So he was showing his weekly reports, his portfolio reports. So right now, portfolio's value $100,000. Next week is $40,000, then it's $200,000, and as soon as this growth started to be like $500,000 per week, this is where people started noticing. This is where the whole GameStop thing started appearing on the front page of Wall Street Bets more and more often, and more people started to learn the story of the deep freaking value guy who started this whole thing. This is basically a Reddit username. More and more people started buying GameStop stocks. Some of them were buying stocks, some of them were buying also call options and everything, but the fact is that people started buying this, and eventually it transformed from trying to make money on GameStop. It transformed into showing like bankrupting all these hedge funds and everything, because people are getting tired of this,
like the war aspect,
battle. Kind of, and people started to be sick of, I don't know, hedge funds, pension funds, always creating their own rules for this game, basically always profiting from us, like, and this and this and that. So eventually it became from just making money on GameStop stock, it became like actual battle between retail investors and institutional investors. And basically that's what we are seeing right now. People are buying and buying. No one is selling. Like everyone is saying hold, diamond hands, basically all the stuff, to the moon, $1,000 is the target price. So, and this is what we're basically discussing, debating with Tevis, and we all came to the basically same agreement that there is no way of predicting what's going to be next week. There is like, it's hard, like I said, Tevis, it's almost impossible to predict what the price of a stock is going to be next week, even if company follows the logic of fundamental analysis of like DCA, discounted cash flow, DCF, I mean, yes, it's still, you see the intrinsic value of a stock, but there is no guarantee that this is going to be the price of a stock next week, next month, next year. Still no guarantees, but it's possible. In this case, it's definitely impossible to analyze and predict what's going to be GameStop price, neither from fundamental nor from technical analysis standpoint. So it is a pure gamble, and me and Tevis, we both agreed on this. It is pure gamble. So if you want to invest in this, it's just like going to casino, red or black, and that's it. It's 50-50 chance. You're either going to make lots of money, a little bit of money, or you're going to lose it all or lose a little bit. That's all. That's all there is to it.
Yeah.
So that's the situation. From value investing standpoint, did you take a look at fundamentals of GameStop? No?
So, well, I haven't personally looked at the company, but back in the day, I was listening to a podcast, and the guy used to be a shareholder like in 2017, 2018 of GameStop, and he thought it was like a deep value stock. And before any of this had happened, I remember he had been saying that he had to sell the stock because he just realized it was a bad company, bad fundamentals, and he didn't want to hold it anymore. So what I think is kind of interesting is like, I think we all kind of agree that the company definitely isn't anywhere near where it should be worth.
Absolutely. This doesn't make sense at all. After our conversation, I'm going to continue with my stream, and I will do a very quick fundamental analysis, quantitative part of it at least.
Oh, sweet.
Yes. So if
That's
you want, you can stay on the stream after this, and I'll basically say you can already assume what I'm going to say, what I'm going to tell. But I don't think there are going to be any surprises or anything like this. One interesting thing, because it's so like we already agreed also as well, it is not all anymore about GameStop. It's now about the battle between retail and institutional investors.
What's kind of interesting about that, I think. So I think if everyone sets a target to hit 1,000, right, then it would make sense like that could happen.
It can. It absolutely can. It can happen with the same probability that it will not happen. So,
exactly, yeah. Well, no, I can really tell. What I think is kind of interesting is like when you think about like the risk versus reward. So if you think about like last I checked, GameStop was what, like 300, 400 or something?
350, 340, something like this, yes.
Gotcha. So if you think like, so 350, it could triple to get to 1,000, right? Like figure out whatever you think the upside of the stock is versus the risk is that it was at like what? Stocks are going crazy, but like it was at like $20, right? Back in the day.
What,
before
GameStop?
this like happened.
GameStop?
Yeah.
It was like $4 stock.
Yeah. So you think about like 300 down to $4, you could lose your entire position, or it could also go up to, you know, in triple.
And this is absolutely casino. That's what I'm saying, basically.
Yeah. So like a lot of people are like think about getting into this because like I've heard stories about like I've heard stories of kids who said like, oh, I put $5,000 in, now I got to 30,000. Like, so people hear that and say like, oh, that could be me. But then you also have to think about like the current situation of like, it could rise a bunch, or you could literally lose everything that you put into it. So I don't see like it sounds like fun to try to make money quick, but like
you can, but it's just like casino. You can make money quick. You can go bet on red $1,000. You can win $2,000. That's it. You just made 1,000. You just doubled your money in 1 minute. But it's 50% chance that you're gonna lose the whole 1,000. Simple as that. Same as GameStop. There is I would say just two things for sure with GameStop situation. First thing is I'm 90% certain that the price will not go more than $1,000, even if it reaches $1,000, because like I was mentioning to Tevis, so 1,000 for them is the moon landing price. So they all say go to the moon. For them, moon landing price is $1,000. But People know about this, and people will know that as soon as it reaches 1,000, it starts falling because people will start selling. Sell limits will get activated and all this kind of stuff. So $1,000 is reached, price will start decline. People know this, and some of them will be like, okay, I'm not going to wait until it's 1,000, I'm going to wait until it's 990. And people know that there's going to be people like this as well, so they will be like selling at 980, and then people start selling at 970. So maybe we will start see the maximum price is going to be 900, but like I said, it's going to happen 50-50. I think that's not going to be more than $900.
Well, what I think is kind of interesting about that is if you think about it, if everyone already thinks the price is going to get to 1,000, what if people started like shorting it, and then like it's still like rose, so I don't know, you can't even tell like when the price would ends. That's what's kind of crazy about it.
So these are my two predictions. I don't know if it's gonna happen, if it's not gonna happen. First prediction: if the rally continues, and it meets all the WallStreetBets requirements, I think that the maximum what we're gonna see is like 900 something, in the early 900s, no more than 923, I think. But it's the first probability. Second probability: if it's not gonna happen, the price of a stock will basically be back at like its normal $5, $10, $15. And another thing, I think it's the only person who knows for sure when the price is going to start declining immediately. It's this guy from Reddit, Deep Freaking Value, who initiated this whole thing. Because if you go on Reddit right now, and I was showing this to Tavis, and once again, people are saying, if he is still in, I'm still in. So this guy, Deep Freaking Value, he is doing daily reports of his portfolio value. As soon as people see he is selling, no matter at which price, $300, $200, $900,
sell. Right.
99% of WallStreetBets will sell the stock immediately. So he's the only person knows for sure when the price of a stock will start decreasing. He right now has the he now has the influence on the market. But he is very he has principles. Maybe he actually wants to show to institutional investors, to basically show that they're not the ones who can rob us from money and everything. Maybe he is gonna hold until the end. Maybe for him it's not for the money. Maybe for him it's about sending the message. Maybe he is ready to actually not even make any money on this and just basically show all these institutional investors to prove the point and stuff. So we'll see. Exactly like I said, it's 50-50. There is no need to anyone to ask, can you analyze GameStop? What do you think will be the price? How is the fundamentals? How is the technical analysis? Because it is absolutely pure gamble at this point right now. And yes, interesting thing about this whole thing is that WallStreetBets became from one of the most ridiculous community. It became one of the most admired community about investing, and on the whole Reddit in literally, I would say, 1-2 days. Last week, everyone was making fun of WallStreetBets. Now everyone I'm not saying respects them.
It's also kind of crazy, like to think like people are taking advice from. So yeah, it works. I can't hate on success. You can't hate on gains.
Yes.
But it's kind of crazy how like everyone's taking advice about like, I built my portfolio around GameStop and getting other people to buy GameStop and shorting the like, it's just kind of ridiculous. Like, yeah, but like, so that's why I've been kind of staying out of it. Just trying to do my thing, keep working on my stuff, on trying to find value stocks. And yeah, I've been trying to just avoid the news, a lot of it. Yeah. It's kind of interesting to watch it play out, but yeah, like you said, pure gamble. You don't really know where it's gonna go. So
I like to see it from the side. I will not invest in GameStop even if it's like 500 and rising, 607. Of course, I'm gonna feel bad about losing the opportunity to triple my investments. It always feels bad. Any stock, it can explode and everything, but there's nothing to do with this. You can also lose 300% of this, whatever. Like, yeah,
there's an interesting quote about that. I think it goes something like, "It always really hurts to watch your neighbor get rich." You know?
I know. I feel I understand, but Value investing, yes. So you were speaking about value investing. You know, I'm also a value investor and everything. I am, like I started in the beginning of this conversation, I'm accepting some growth investing in my portfolio. I like investing in recovery companies, like I was also mentioning in the beginning of the stream and everything. So for me, GameStop doesn't make any sense from neither of these investing standpoints, pure gamble and everything. But because I know value investing, it's been working since 100 years of proven success and everything. I still believe in it. I still do it. I still practice it myself. 80% of my portfolio is value investments. But the reason I still accept growth companies in my portfolio is because I see that right now it's not just about the fundamentals and everything. In the past, why it was about the fundamentals? Because let's say so only smart people, only educated people, only rich people had access to the stock market. You needed to have actual
Now anybody
broker.
does.
Now anybody does, and that's the thing, because so many people just invest because WallStreetBets just said about one company, pump and dump and everything like this. Yes, companies, they still follow the value investing principles, value fundamentals and everything. It's not also just about us retail investors, there's also institutional investors. So obviously value investing will always make sense, let's say, so it's definitely in long-term perspective. But the reason, once again, I am having some growth companies and everything is because of accessibility to investing, is because so many people now can invest. You can invest in fractional shares. $1 is enough to start investing. ETFs, mutual funds, all these kind of things, which I don't think were existing 50 years ago. There was nothing like this. Right now, investing as easy as it can get. And access to information is even easier than this. How it's called? Yahoo Finance, Wall Street Journal, like Market Watch, all these websites. They give you summaries of all this, like quarterly reports, annual reports. If you don't know what it means, you go to YouTube and see like what's cash flow, what's free cash flow. You can learn all these things. So because of this accessibility into investing, sometimes people always want to get rich quick. And now, right now, they can research what stock is going to explode in next month, what stock is going to explode in February, what stock is going to explode in March, and just invest in these companies without even looking at their fundamentals. So long story short, but all the growth companies that I have in my portfolio, which is 2.5 of them, 2 companies and 1 ETF, which is ARK ETF, obviously. These 2 growth companies, they are pretty good They're growing pretty good so far recently, but I still selected them with the big emphasis on value perspective. So I went ahead and I saw their fundamentals. I went through the balance sheet, income statement, cash flow statement. I went to do qualitative, quantitative analysis of them, and they're very good investments. In addition to growth investing, they're very good investing from value perspective as well. And this is perfect combination for me. And these companies are Corsair and Renewable Energy Group. So if you
I looked into that one.
Which one, Corsair or Renewable Energy?
Is the renewable energies, the ticker REGI?
Yes, I'm invested in them since $30. Now they're like 90. They were 100.
Oh, that's sweet.
They were 100 earlier this week. I invested with them since 30.
Crazy, bro. I looked into them around, I think actually maybe like 15 or 20 for me, but I didn't invest in it because the biggest thing was I still wasn't sure about if it was undervalued. But yeah, it was pretty it was a pretty good looking company. Like when I first looked at it, they had really good cash on hand, really good growth prospects. Yeah, just it was trading pretty low. Like price to earnings was like below 10, I think.
4.
Maybe
it's
even
like 4 or something.
Yeah, it was really low.
So this is one of my 2 companies besides Corsair, and I'm pretty happy with these investments. I'm gonna hold them long. I switched from oil company. I had first Marathon Petroleum, then I had EOG Resources. These are actual like oil companies, but I do believe that people in the future will start to get rid of cars that use gas. Basically, they will start to be using more green sources of energy, renewable energy. So that's why my energy, the only energy company from energy sector right now is renewable energy. and I'm prepared to hold this renewable energy group for basically long term, and let's see how it goes.
Nice, man.
So yes, and AMC is also part of this whole saga, if you know. Yes, I was about to invest in AMC 3 months ago, I think, to be honest. So
that's like a movie theater
yes,
chain, right?
yes.
Yeah.
No, part of the business is movies, basically. Yes. They also have the TV channel, I think, AMC Networks or something like this. So part of this is the movie theaters, yes. And yes, I was about to invest way before this whole thing with Wall Street Bets and everything. I went ahead and looked at their fundamentals. They were a company that was suffering, obviously. No one is going to the cinema right now. But this company falls under criteria of investing, for me, for investing in recovering companies. And 2 of these are Carnival and Southwest in my portfolio. So this was supposed to be my 3rd company that is recovering. And these companies, it's not value investments. Obviously, like there's no revenue for Carnival or anything. These companies, I'm holding them until things are get back to normal, and then I consider selling them. So these are not like kind of long-term investments for me. And so one of them was supposed to be AMC. Like I said, this was from all the other competitors. I don't remember, Cinemax, I think, Cineplex, IMAX, all these kind of things, yes. AMC was the one with the biggest chances of survival, basically. That's how I select my companies in recovering sectors. And AMC, and I was literally about to invest like $800. I think we did calculations a couple of hours ago, like it was supposed to be like 4,500. So it's like 6 times my position, like 600% revenue in 2 months I was supposed to get. But at the last minute I was like, okay, I'm not going to invest in AMC. I already have 2 companies that are recovering. Now I wish I did it.
Do you have cash on the sidelines?
Next week I'm buying again, so I will initiate the deposit next week. So not yet. Nice. I do dollar cost average. Like I do not hold extra cash. If I see extremely good opportunity, I still try to wait until and do dollar cost average, because okay, you see good opportunity, next day it's gonna fall 20%. Or for example, you see a good opportunity and you don't buy it, next day it falls 20%, and when it's your day to buy, when it's dollar cost average day, for me it's like 6 or 7 of the months. And then like for example, couple of days before I'm buying, the price is gonna fall and I'm buying it with 20% discount. So like you cannot time the market, long story short, what I'm trying to say here. So
what I think is kind of interesting is you've probably heard like the story about back in the Great Depression, there was someone, like there's a story goes that somebody was going to get his shoes shined, and he asked like the shoe shiner boy, like, oh, do you have any stock picks, something like that? And the shoe shiner boy was like talking all about the stocks and blah 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 blah, and that's when he went and sold all his stocks.
I know I heard this story. Yes.
Yeah, it would be super interesting.
It's
if
like
the market fell.
When all these other people not relatable to investing start talking about investing,
exactly. It's
time to sell.
Yeah, I'm getting ready. Well, I don't have much cash on the sidelines, but like I'd be super pumped if we saw prices fall again. It'd be super cool.
Obviously, right now, in the last week, my portfolio lost like almost 5%, so like small correction. And like I said, it's very perfect. It's perfect because next week I'm buying. Not next week, I think like in the beginning of next week, let's say. So like, I don't know. Let's see. So yeah, 1 week from now, let's say, so I'm buying more, and hopefully this week we're gonna see more decline. Hopefully this Wall Street Bets war continues. So basically when it's time to buy for me, I have like 10% discount. It will be perfect. So this is the reason why value investors basically like corrections and recessions and all this kind of stuff. And by the way, do you know why one of the potentially correct reasons why the market declined this week? Why do you think? So
no idea.
Lots of people thinking, and I think it makes sense, and I'm almost certain that it is this reason why it happened. So the thing is that Wall Street Bets basically is squeezing all the shorters. That's why basically it's kind of called short
Oh,
squeezing. Everything.
so a lot of people sold out so they wouldn't be in the short situation.
So long story short, yes, that's what hedge funds needed to do. In order to cover their short position, which is like minus 300%, they had to sell their long positions.
Oh, okay, that makes sense.
To make some money and to cover their short positions. And basically, most likely, and I also honestly believe in it myself, so most likely this is the reason why we saw the like 5% correction this week. And that's what I'm saying. Hopefully next week it continues, but no more than 1 week, because I don't want a 20% loss in my portfolio. one more week is enough for me. Then I buy 10% discounted stocks, and starting next week, next week, I mean, everything goes back to normal. Will be perfect case scenario for me. But let's see. There is nothing perfect, so let's see if it's gonna happen or not.
Yeah, I mean, yeah, I'm just hoping that if there is a big drop, I'll have some cash on hand and we'll be ready.
Okay, good luck with this. You buying dollar cost average as well, I assume, yes?
Well, I kind of have like a strange strategy to it. Yeah, cause like I'm not working, so I haven't had a lot of cash in a while. I do some work here and there, but I just I've also been kind of looking for where I want to put my money. So I've been kind of putting that money to work. I've had a lot saved up from the summer work and stuff like that.
Yeah. And I think you are good, because most of us, 99% of us, when we were 18, we didn't even know how stock markets work. So you don't worry. You are already in way ahead. Majority of population of Earth, you're way ahead of us. So for you, it's acceptable to how it's called, like to not be in a rush and everything. So you already ahead, way ahead of us.
Yeah.
Don't worry.
Yeah, my game plan is but once my business works a little bit and I do have some money, then I'll probably do some kind of like dollar cost average. I definitely like the idea of putting $500 a month towards my Roth IRA. That seems like a really smart strategy. And do at least that, and then put more into my individual brokerage probably.
Yes, just max your Roth IRA, max
exactly,
it, obviously. Yeah. I am doing strict, like I absolutely do not cheat on my DCA strategy, dollar cost averaging. I absolutely always buy as 6 of a month. So 6th of May, 6th of June, 6th of July, 6th of August. Unless markets are closed at this day, obviously I cannot buy stocks when it's closed. And I don't want to buy on the pre-market, after market and stuff. So if it's Saturday or Sunday, if it's a holiday day, I just buy on the first available open day. And it's been like this since the beginning. I always, no matter how tempting it can be, like I know like all people say buy the dip, but who knows, you buy the dip and then it falls 20% more. So you cannot time the market. So I am absolutely following the DCA strategy all the way from the bottom until the end, all about the DCA, and let's see how it goes.
Gotcha, man. That's sweet.
Yes. So.
Yeah, I got to get going, man.
Yeah, of course, no problem. Thank you
for
joining.
It's super good to talk to you, man.
Of course. So I got lost from Instagram, as you can see already, but you can always see me on YouTube. I don't know if you're watching my videos. I have 15 of them per week. So you get enough of my face if you watch every single one of them. But yeah.
15 per week?
15 per week, but they're short videos, like 3-minute videos.
I thought you went live 15 times each week.
No.
Oh, yeah.
So, and I did my first live. This is my very first live from technology standpoint perspective. I think it was under average, I think below average. I mean, because camera is not working in Zoom, and then there is like, I don't have my chat, so I don't see if people are chatting or anything, asking me questions unless I put, so I need like work on this. But for first live, I think it was pretty good, acceptable quality. I will keep improving on this.
And I've been liking, I haven't watched a ton of your videos, but I like the thumbnails whenever they pop up.
Okay, that's
pretty sweet.
Thank you. And yeah, I will let you know if I do any more lives. So it's always nice to have guests, always nice to have second opinions about what's going on. It's not about just GameStop. I will maybe, let's see how it goes, maybe one live per week, one live per month, or on demand, or whatever it is. But I will let you know, and if you want, you can join. It's gonna be just like this, like 20-30 minutes. We just talk and chill and chat.
Sounds awesome.
Okay.
Thanks for having me, man.
Of course. Thank you for joining, of course, and good luck rest of your day, and good luck with investing.
Thank you.
Okay, bye. Okay, what's up, investors? Now just you and me again. So yes, let's see what we're gonna do now. Okay, so Gabriel, if you're still here, said he's a dog person. Let's just watch some dog videos really quick right now to chill from investing. Okay, I even forgot how to spell dogs. Dogs videos. Just some rest time. Oh, I know. Gabriel, if you're still watching, have you seen video when Doc was practicing angry faces in front of the mirror? Doc, this is pretty funny. Practicing mean face in mirror. Okay, this one is cool. I'm very bad at commenting videos, but this is basically the video. That's it, 15 seconds. So yes, so we started all with Wall Street bets to be specific. If you've been watching this whole stream since the beginning, you already know how it started, what was the reasons for the whole GameStop situation, what's going on right now, and basically what the whole situation is about. As you can see, it all started as a meme, as a joke, but it turned to be an actual battle, last stand between retail and institutional investors. Retail investors are those people like us, just people who buy and sell shares in normal quantities, like, I don't know, 5, 10, 100 shares, like spending $1,000 per week, $1,000 per month. Regular people, regular investors. Institutional investors are those people who buy millions of shares, like all this Melvin Capital, Citron Research. These are hedge funds, pension funds. These are institutional investors. And there's always been a battle between us, retail investors, and institutional investors. Like we didn't have voice, let's say. So before, all these institutional investors were exploiting the game of investing, making the rules in their advantage. If there were any mistakes, if there is a mistake by a retail investor, if you or me is making a mistake on the stock market, we just lose our money, and that's all there is to it. We cannot do anything. We cannot return our money in most of the cases. This money is gone. But if institutional investors are making mistakes, one of the best examples was the financial crisis 2008. Like we started a couple of hours ago, the thing about the financial crisis was the mortgages, because they were giving mortgages practically to every single person who asked for the mortgage. And they were like basically collecting these mortgages, bringing this to rating agencies, and rating agencies were assigning high rating to these mortgages. I can even maybe use paint and draw stuff to make it even look good and stuff. Self-explanatory and everything, I mean. Okay, so let's use, these are people, like regular people, and they're coming to the bank and they say, I need mortgage. And the bank people were saying, okay, I'll give you a mortgage, but I need right now, in order to get a mortgage, right now you need to provide the source of income. You need to tell, like, if you're a full-time worker, if you're a full-time employee, gets lots of, I don't know, like, I never got mortgage, so unfortunately I'm just creating things out of my head. I do not know what's the documents I need to get for this, but obviously it's a source of income, credit score, some references from your employers, employers and everything like this and that. Maybe some, I don't know, medical bills that see that you are not gonna, I don't know, like have some health issues and you will not be able to repay mortgage. Right now, I would say it's complicated to get more. But in the past, before 2007, 2006, it was also strict, But at that point, at one point in time, they were giving mortgages basically to every single almost person. Like you can come to the bank and say, can I get a mortgage? Okay, how much you need? 500,000. Like, can you repay it? And you say yes. And the guy says, okay, here's your $500,000. And they were giving mortgages basically like that to everyone. So this is mortgage, this is mortgage, this is mortgage, that they give mortgage. And then they were combining all these mortgages in one collateralized mortgage obligation, CMO, and then they were giving them to rating agencies. And these rating agencies were assigning very good ratings to these securities, to these collateralized mortgage obligations. They were giving them AAA rating. AAA rating means basically that this security is a very low risk security. You can invest in this, and basically there is no risk of default, that this is a good solid investment. This is basically like investing in treasuries, in like bonds, government bonds and everything like this. And then when these securities were assigned AAA ratings, they were given to the open market. And basically they were given to regular investors, to institutional investors, for us to invest in these securities. Like it was sold like basically like fixed income securities, if I'm not mistaken, okay? But the thing about this is that these securities were not obviously AAA rating securities. These securities had very high risks of default because they were like given to random people with no proof on income. They were given left and right. So people were receiving these mortgages like basically for just because they promised to repay the debt and everything like this. So obviously these mortgages started, these collateralized mortgage obligations, they started collapsing one by one. People stopped paying people stopped making mortgage payments. More of them started being defaulted. So more and more of these CMOs started to default, which basically the securities and investors who are investing them were losing their money because that's it. The security completely defaulted. So like that's it. No one knows where to get this money from. And these banks that originally created these collateralized mortgage obligations, they were not responsible anymore because that's it. They sold this on the market. That's it. They got their money back. So for them, for banks who gave original mortgages were covered. So that's it. They were repaid. So they did not have any like obligations. So that's it. They already collected the mortgage payments basically for this. They got repaid for this mortgage that they gave out to random people. So they were good basically. Eventually when this whole started thing to collapse, everyone basically, everyone suffered from this. Every almost sector, financial, even the banks suffered from this. And that's what I'm saying. The rules of this game, of investing game, of the stock market, financial market changed once again in the institutional investors' perspective. Governments were bailing them out. They were giving them money, saving these institutional investors. Regular investors like us, we lost money. People who were having mortgages, they lost their houses and all this kind of stuff. So we are the ones who paid for these mistakes, mistakes that were done by institutional investors, and we were not compensated almost at all. While those people who were already who offset their losses, who still got some part of their mortgages back by selling these CMOs, they got also bailed out by the government, so they were saved. So even though they were the ones who were responsible for this collapse, they were the ones who were saved by the governments. For this reason, obviously, people got annoyed, people got angry, people got mad, and they're like, okay, it's not the way it's supposed to be. Like, what about us? What about regular people? And so eventually people became angry at them. You always know, like, you do not like rich people getting richer while poor people getting poorer. So all these things, they were inside of us, like combining, like we were collecting these negative emotions until eventually there was supposed to happen one moment when something was supposed to happen. So retail investors, us, will start, to go against these institutional investors. And one of these catalysts, like Tavis said, it was the WallStreetBets basically finding out this stock, which is GameStop, being shorted so much that they decided basically to buy all the shares so they will not be able to cover their short positions. Long story short, short position is you can either buy a stock. Let's see some Wall Street and let me have some breathing and stuff. Okay, so the idea about short selling, okay? The idea about short selling, regular investing, first of all, to make it even more simple. If you buy a stock, your idea is to sell it higher, is to sell it more expensive stock that you bought it for. So the idea of investing to buy stock for $50 and to sell it for $100. Simple as that. But short selling is the opposite. If you expect that the stock will decrease in value, you can short sell it, which basically means if the stock right now is $100, but you think it's going to be $50 in a couple of months, you can borrow stocks from your broker, sell it now at $100, and then buy it back later for $50, which means that this $50 is per share is your profit. You sell it for 100, you buy it for 50, you return it to your broker, that's it, $50 is your extra profit. This is the idea of short selling. GameStop were short sold so much. GameStop shares were sold 120%, if I'm not mistaken, even more than this. So there were more shares being short sold. Short sold interest in short selling was in more shares than there were actual shares on the market. And people basically saw it. Wall Street bets people saw it. They started buying all the shares back. So once again, you need to cover your short position. If you sold a share, you need to buy it back and return it to your original owner. And this is basically what people start doing. If there is no more shares on the market to buy back, that's it. Like, you need to cover your short, but if there is no shares to buy, you cannot do anything. And the principle, the price of share prices, they subject to supply and demand, which basically means the following. If there is more people who want to buy any particular stock than those people who want to sell this particular stock, it means that the share price will go up because there is more demand in this stock than supply of this stock. But if there is more people who want to sell a stock than those people who want to buy a stock, then it means that the price will go down to match buyers and sellers of the stocks. And this is what happened. Imagine if you want to buy stocks, if you need to buy stocks because you need to cover your short position, but there's literally no shares available for sale. You need 1 million shares back, but you can only buy 10,000 shares. So for the rest 990,000 shares, there's just no availability of them. For this reason, price starts to increase and increase and increase and increase all the way until some people start actually selling shares. So this is why it went all the way from $4 all the way until almost $400, and at some point it was more than $400 per share. This is what happened. This is basically the idea of short squeeze. And yes, this battle, this last stand between institutional investors, retail investors is been going on for the whole last week. Let's see how it's going to be next week. Basically, that's all been happening last week, and we can only guess what's going to happen next week. Me and Tavis, me and Thomas were speaking about, we gave all our perspectives, what we think about these things, but it is just a casino after all. It's just a gamble. Stock market is not a gamble when it follows more or less at least some of the rules of fundamental analysis, technical analysis, but GameStop, AMC, Nokia, Best Buy and Beyond, BlackBerry and all these other companies that are in the focus, in the spotlight of Wall Street bets right now, they do not follow any logic. They are absolutely pure gambling at this very moment, and we can only guess and assume and predict what's going to happen with them in the nearest future, specifically next week. So that's all there is to it. I think like almost 3 hour stream, I think it's enough for the first time. I will keep learning how to do better streams. I will keep learning how to do better Zoom calls. I will keep learning how to improve the quality of a stream, generally speaking, let's say so, okay? I will do my best to do better streams starting next time. I'm gonna do them. I don't know, it's maybe gonna be next week, next month. Let's see. I enjoyed doing streams. Thank you all so much for watching. My name is Artem Dikarev. Thanks so much, and let's get straight to the point. Thanks so much for joining.